Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys. I apologize for the late start here. I was actually legitimately just trailing my stop loss and lost track of time. So I apologize for that. I took a Bitcoin trade yesterday in our Discord, and it's off to the races this morning. So I am trailing my stop loss. So let me just show you guys what caused me to be late. Sorry about that, guys. Again, it's been a while. I mean, I wish I had like a whiteboard of like days that I've not been late, because it would be like day 300 right now. And then now we got to scratch it out and say one day since accident or whatever. You know, like when you in like factories or something, they'll have like 200 days since last accident or something like that. Anyways, I just trailed my stop loss on Bitcoin, adjusting my stop loss slightly just below yesterday's swing low intraday. And that looks good. Okay. So I took a trade yesterday on Bitcoin. I sent out the signal yesterday in the afternoon, 1:20 p.m. So it has not even been 24 hours. And this thing it bounced beautifully off the level that I marked up. So let me show you this trade. Let me brag for a second here. Hold on. I got to get my pen started here. There we go. Okay. Okay, give me 1 second. Okay, so I took this trade yesterday. I liked Bitcoin a lot. It was on my watch list here. Yesterday, Bitcoin right here. It's a top setup on the Edge Finder currently. It pulled back to a level that I had been looking for. This nice level of support got tagged, and boom, off to the races. So what I did this morning is my stop loss was a little bit wider. I think my stop loss was just down here or so. And I just wanted to trim my stop loss slightly here this morning. And I'll show you the actual P&L on the trade as well. IBIT is the ETF that I trade for Bitcoin. And you can see we're up about $2,300 on this trade so far, but I have not yet trailed this stop loss. I'll show you how I do this. This is a little confusing because I trade ETFs. So I just have to adjust this accordingly. My stop loss is now 1.63% away from my entry. So let's go do that same calculation there. 1.63 would put us right here, 36.77, 36.77. We just modify there. And now my stop loss is trailed on my own personal capital. So there we go. Stops trailed. Bitcoin looks good. I like the chart for an upside move. And I've been kind of in this camp for most of 2024, which is, by the way, yes, we have breaking news. Let me get over there. 9:45, we have PMIs. Unemployment claims coming out here in just a second. Let's see if this causes any stir here this morning. Sometimes it does. Most times it doesn't. Let's see if we get any significant spikes. 227, slightly better than expected. Let's see if that causes any stir in the markets here this morning. Arguably decent for the dollar, right? Some strength. Unemployment claims coming out. Revisions to the last one. Very little to no revisions. 227,000 unemployment claims. That's a strong jobs print. We will take that. And again, it kind of continues the story, which is stocks doing okay on a decent economy. Economy seems to be holding up okay. At the same time, dollar index strength may persist with that unemployment claims. But again, we've got basically a number coming out here this morning. Sort of close to as expected, but not quite. I mean, it's a little lower than expected, which is good, right? Less people filing for unemployment is a positive thing for the dollar, and arguably a positive thing for the stock market as well. Also, people mentioning the yen as well. I'd like to look at the yen just to see what's going on over there. Japanese yen here this morning. Any pullbacks? Dollar yen, maybe a slight pullback here. Dollar yen's been such a beast. This has been a chart that I've been wanting to actually look for possible long setups on. Will the dollar recover? I'm not sure what you mean recover. If you mean go up, I mean, it's been up for weeks. Dollar has done a very good job recovering so far. If you mean like, does it continue to go higher? I actually like the idea of this thing continuing higher. I mean, with unemployment claims coming out good, jobs data generally very positive. Really, really interesting move on the dollar. And I do think that yesterday, was it Stan Druckenmiller, who's a really, really famous trader and investor? He mentioned yesterday, his words were in an interview, he mentioned all roads lead to inflation, which I very much agree with. And if you've been watching my videos and streams and stuff, you know I've been talking about that constantly. There's a lot of paths here right now that lead to inflation staying sticky. The jobs data is pretty good. You know, companies are hiring people. People are relatively employed. At the same time, you have government spending expected to be very high, regardless of who the president is, right? Both presidents are going to spend a lot of money. So there's a lot of roads that lead to inflation. The Fed's also looking to cut rates. So to me, a stronger dollar makes a lot of sense. Until something changes, until you get a change in the data, until you get, you know, the economy materially weakening. I'm sorry, my words are not coming out right. But that's not the case right now. What we see is again, I kind of agree. Most paths, if not all paths, lead to inflation, which means US dollar higher. What does that mean for gold? Is that a steady move down? That's a good question. Oh, I think I might have accidentally banned somebody. That might have been a mistake. If I banned you, I'm sorry. That is awkward. In my software, the little button clicked up and said ban, and I was like, wait, what is this? And then I accidentally clicked it. Yeah, hopefully send us an email if you want to get unbanned. That's my bad. Support@a1trading.com. So anyways, the dollar index, with it going up like this, you know, is it set to continue? And what does that do to gold? Well, gold is up and away anyways. People have been, you know, I get this comment very frequently. Whenever the dollar index and gold move in the same direction, I get a bunch of questions about it in my comments, in my emails, my DMs. People saying, Nick, you know, dollar index, shouldn't that be pushing gold down? Why is gold going up with the dollar? Well, this can happen, and it can be confusing, and it's understandably confusing. You would think, well, if the dollar is strengthening, shouldn't that push gold down? That's traditionally what people kind of expect. Here's the thing. The reason that it's not such a one-to-one is because it is possible that the dollar index is strong relative to other currencies that are weaker. And at the same time, all currencies are losing purchasing power, causing gold to go up. Let's break that down a little bit more. Other currencies, it's not that the dollar is just incredibly strong. Like, it's not that the dollar looks like, oh, they're never going to cut rates again. The Fed's still going to cut rates. That's the expected outcome. But what's important for you to understand is that the Fed is expected to cut rates slowly, whereas other central banks are expected to cut rates faster. So other currencies, it's not that the dollar looks strong, it's that other currencies look weak, right? When we look at the euro right now. The euro's dropping hard, the pound dropping hard, the Kiwi dollar, the Canadian dollar is getting smoked by the dollar right now, right? The dollar is not, it's not that the dollar is remarkably powerful because we're never going to see rate cuts and that they're going to hike rates. That's not the case. The story is the other central banks, like the Bank of Canada, which cut by 50 basis points yesterday, which is 0.5% for fancy finance bro wording. They cut 0.5% on their overnight rate. Well, other central banks are cutting rates faster. That's what's making the dollar look relatively strong. But that doesn't make the dollar necessarily be this unstoppable force that makes gold go down, right? Now, if central banks were talking about hiking rates, gold would plummet. But central banks are talking about cutting rates. That's easing monetary policy globally, aka money printing everywhere, not just the US, money printing in Europe, money printing in all over. When central banks are more dovish, gold typically goes up, regardless of what the dollar specifically is doing, right? The dollar is just one part that gold looks at. The gold market is looking at what's happening in Europe, what's happening in China, what's happening in Asia, everywhere, right? So something to think about. Gold can completely go up alongside the dollar. It is very possible for that to happen. NASDAQ's making a great recovery here this morning, guys. I am long semiconductors, SMH, which this thing has been such a volatile trade. In fact, this thing has just been so jumpy recently. Take a look at the 4-hour chart here. I got in over here, or I should say I added to my trade over here. I took an initial position back here, but then added to my position at a higher cost basis, which brought my average price up. I put my stop loss below this level of structure. We came down and tested that yesterday and bounced very strongly. Buyers came in really well for semiconductors. This is NVIDIA, AMD, Qualcomm, Broadcom, right? Micron, all those companies. So that has been a real nice game changer for that. But what caused the big bounce? Well, one of the big reasons was Tesla. Did you guys see Tesla earnings? Tesla earnings beat expectations by a country mile. And this is awesome because I have a position in Tesla. So let me brag today because I've got a good set of trades on right now. Things are cooking in my portfolio right now. I'm long Tesla. I'm long semiconductors. I'm long the Russell growth. IWF is the ETF that I'm long. A lot of things are working really well for me right now in my trading. I wish that was every day. It is not, but right now it is. Tesla's popping up. I've got a good sized position in Tesla, and I've sold puts on Tesla, and I've sold covered calls at 280, which are going to expire worthless on Friday. So I've got a good setup on Tesla. I do trade stocks. I typically trade options on stocks, selling puts, selling covered calls, something that I really like. I sold my Tesla for GM on Monday. Oh no, GM has been killing it too. But Tesla just in the last, well, actually, GM had a huge pop too on earnings, which is awesome. But Tesla just killed it yesterday. Up currently, guys, 14% in a day. And this is the thing. I know a lot of traders love to trade their currencies. They love to trade gold. But if you want to talk actual volatility, gold and currencies move very little in percentage form compared to individual stocks. Today, we've got some fun stuff. I gotta mention this here because we got something to share. Let me see. Do we have the link ready to go for the early access, Chandler? I don't know that we do for you guys. I'm going to pull it up just in case. If you do have it, let me know in Discord or something, but I'm just going to get it ready. Today's a special announcement day, guys. We're going to go into something here. If you are a stock trader or an options trader or an ETF trader like myself, we've got something really exciting to share. I'm going to get this link. Okay. I'm going to send this, Chandler, in our YouTube chat. So in our Discord, I just put that. Okay. So here's what's up. Behind the scenes at A1 Trading for the last year, we've been working on a secret project. I've been sneak previewing it a little bit here and there on the live stream. Today, I'm going to show you guys officially what we've been working on. It is not yet currently available, but we are very close, and we're going to be doing some early access information today. So if you are a stock trader, if you are somebody interested in trading ETFs, I trade ETFs quite a bit. I trade, just so many different things. Semiconductors, like I showed you just a second ago. I trade sectors. I trade like real estate. I'm long the real estate sector. These are things that I have traded for a long time and really like to, beyond just trading the indices, you can get down into individual sectors. I can trade the real estate sector. I can trade semiconductors, technology, financials. I can trade all sorts of individual things. Well, here's the cool stuff I want to show you. Today, we are announcing early information on the brand new A1 stock box, which is a very, very exciting thing that we've been working on behind the scenes for about a year now. So many of you guys are familiar with the Edge Finder, right? The Edge Finder is built specifically for FX and futures traders, whereas the brand new stock box is a new tool with a totally new set of data, totally new set algorithm built specifically for stock traders and options traders, as well as ETF traders. So I'm going to show you guys some of the new features that are available within this new tool. And while I do that, if you would like some early information about this tool, I just dropped the link here in the chat. So for those of you who do want access to this, if you have the Edge Finder already, or you are somebody who's interested in stocks or ETFs or options, take advantage of this link I just dropped in the chat. That is going to be your early access information guide. If you'd like early information, very special early discounts, we're trying to look for people who would like to give us some feedback on the tool. In exchange for that, we'll give it to you for a very cheap price. Okay, so what is the stock box? Stock box is the same concept as the Edge Finder, but built for stocks. What you can see here is we've got all sorts of different stocks on the screen right now. In the top stocks page, the top stocks page allows you to look at scorings for stocks that we like to watch. So Lululemon, of course, you've got things like PayPal, you've got things like Starbucks in here, AT&T, Microsoft, T-Mobile, Google, right? Intuit, all these different companies. And what we've started to do here with the brand new tool is score things by their financials, company financials, the momentum of each chart, the technical trend that we're seeing in each chart, as well as the 13F scoring, which shows you what institutional money is buying and selling, as well as the insider transactions. So this software, just like the Edge Finder pulls in information that's relevant to futures and Forex traders, this new tool allows traders to track all sorts of powerful insights for stock traders. So we also have one of my favorite features on the entire product, the top sectors page. And the top sectors page, if I can load this properly, we'll do kind of the same concept as what we've discussed with the Edge Finder's top setups for Forex and futures. The top sectors, if it would load, I'm not sure why it's not. It will load things like IWM. It'll load things like XLF, which is financials, real estate, consumer staples, technology, all sorts of stuff in a singular page. And I do warn right now, when I say early access, I do mean early access to a tool that we are actively continuing to develop. Now, when we launched the Edge Finder, when we first launched it, looked like a baby version of what it is today. But we did that so that we could take on early access people to try out the tool, to give us feedback, and to help fund the project as we continued to build it. So the stock box, we're going to be doing the same thing. We're going to be offering very discounted early access to this tool when it launches, which is coming soon. If you'd like all the information, I dropped the link a moment ago. I'm going to drop that link one more time here. Here it is. Fill out this form. If you are interested in early access to the stock box, all of the information for that will be found there. So all of the early access discounts, all of the release date information, all of the features in detail will be shared there within that form. So again, take a second to fill out that form, get in on the wait list stuff there. But you get access to the top sectors page, which, by the way, I took a stock or a trade on XLRE, which is an ETF that tracks real estate. I liked the setup on the stock box because it was looking at, again, a lot of the macro here. So you've got macro scoring, so GDP, PMIs, all that same thing that you might be familiar with on the Edge Finder. We've now carried that over to some of our favorite ETFs, sector ETFs like consumer discretionary, financial services, energy, Russell, utilities, industrials, gold miners, semiconductors, technology. We've brought basically our technology to the stock box, which is Edge Finder kind of reformed specifically for stocks. So I'll talk more about this in a second. We're going to be doing preview stuff about this all day long. So in the meantime, we've got our next show here. So we're going to talk about some technical setups with our weekly guests, Miko and Marco. Before I do that, let me just remind you while we take this quick break, take 2 seconds, record or throw your name in the early access information form that I just shared. This is going to be an early access special offer that we're doing. It is temporary, and it will give you the best price that we ever do for the tool because we want your feedback. We want to hear from people who are interested in stocks and options and ETFs to help us make this the same quality level of a tool that the Edge Finder has become over the years. All right, stay tuned, guys. We're going to take a quick break. Then we got Miko and Marco joining us on the call. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, and we are back with Miko and Marco. Sorry, guys, for the layout. We'll fix that in just a second. Stay.
No worries.
There we go. How are you guys doing?
Hello.
Good to have you guys back. And for our regularly scheduled program, taking a look at, of course, all the usual candidates, taking a look at the dollar, looking at Bitcoin, looking at currencies, and so much more. So I want to go ahead and just give Marco, maybe you go first today. What are you? What's on your own watch list?
Yeah, sure. So for me, obviously the dollar pairs have been going down for quite some time now. So I was definitely looking for sell setups. Nothing really fit my plan 100%. Now we're getting a bit of a pause, which is possibly a concern, but I'm just not seeing that massive bullish pressure. So I'm going to be more patient. Hopefully we can continue with the overall downtrend like this. So that is for the euro and the US dollar. Then we have the Aussie US dollar, which is pretty much a similar story. Maybe this is just a little bit of a pullback, a little bit of a pause before we continue going down. And it is actually a bearish pattern that I can see right here on the very short term, an ascending channel. And then also pound US dollar, again, going down, but just not showing me those high probability entry points. So the pound looks the worst out of all three. I would say my focus is on the Aussie US dollar right now because of that bearish pattern. JPY pairs, they have definitely been pushing up. We had some nice momentum right here and here. Unfortunately, it just could not continue. So then we had a bit of a pause. Right now we're in a bit of that correction and range bound territory right here. So not looking the best. AJ is the same and NJ is pretty much the same. So I was definitely looking for buy setups after this momentum. I didn't take any trades. but I would like to see possibly that momentum continue up. So the JPY pairs have just broken out of a massive range, and they haven't really broken this major high. Let me just check on EJ. EJ has broken out, so that's a good sign that they have broken out of this massive flat range. But unfortunately, as of yet, no extremely high probability price actions, so I'm still on the sidelines, still waiting for those 10 out of 10 setups.
Awesome. Very cool. Miko, what about yourself? Top watch list items for you today?
Yeah, so at the moment, I'm currently long on Euro USD. We've had a really big move and come back into some big areas where I'm anticipating a bit of a bounce. Not so longer term, but I think the market is likely to have a bit of a breather. Dollar looks like it's come up to some areas where it might take a breather as well. But we've come into a nice area of confidence here for Euro. Long standing trend line there connecting these major lows, and also a really nice support level there on the left. So I hopped in this morning about 4 hours ago on the last 4-hour candle closure. So we're going to see how that goes. I don't really have anything else I'm looking at. I'm keeping an eye on the yen pairs, but I'm not quite, I don't have a fixed bias for them yet, whether I'm going to be bearish or bullish. So I'm waiting for a bit more information there. But in terms of dollar, I do think we can see a bit of retracement. So I'm kind of looking at going the opposite direction. I also like gold and silver, but they just haven't retraced enough for me, unfortunately, and they're starting to look bullish again. Did see some nice downside yesterday, but this was the area I was kind of hoping for, but looks like gold has other ideas, and silver, looking at this area here for a retest for some longs. Maybe we still could see a move down. I'll wait to see if that does happen. But yeah, very bullish on these guys and just looking for the pullbacks. But other than that, there's not much else I'm looking at the moment.
Okay. Yeah, fair enough. Gold has been such a one-way street recently. It's just been very little pullbacks. And even when it does pull back, it's like if you're not so quick with it, it's already back to the highs. Gold up 0.9%, silver's up 1.16. Silver had a pretty nasty drop yesterday, but then, quickly recovering that already. Definitely the more volatile of the two in terms of a percentage moved perspective. Stocks are up a little bit here this morning as well. And the dollar, let's see, the dollar index pulling back just a little bit here, but was actually able to break this huge level. I was actually looking at this 61.8% retracement, which I thought was crazy that price came all the way up here and basically took no stops to get through the 61.8% retracement, just completely a V-shaped move here, which is wild and kind of rare for currencies, but just thought that was interesting. Marco, what are your thoughts on the dollar index? Is this going to continue, or is momentum strong enough to push it back to those, yearly highs, or is this going to fizzle out?
Well, just by gauging the momentum on the daily chart, I'm not seeing that pause. I mean, this is just a very small bearish candle when compared to the candles in the per price action. So this was kind of a bit of a pause, but it had no conviction. Instead, the next one was blue and big. So I'm not seeing any signs of stopping, to be honest. And my bias is for this to continue going up. For me to have a more bearish bias, I would need this candle to print like this, and the next one to continue with that bearish momentum. Until that happens, I'll be a bull in this market, which is pretty good. I want the dollar pairs to continue trending down. I think it's a very good play. And I think for trend traders, it's a much better story than to get some sort of a messy price action here, because this is a very strong trend. And if you had some nice trending entries on the dollar pairs, you could have made some very decent percentage. So that's what we love. We love this type of movements.
Fair enough. Yeah. Awesome. I wanted to brag for a second. I did actually end up taking a Bitcoin position. I know we talked about it last week, but I have not traded Bitcoin in a very long time, but I bought the pullback here in the last few days. We retested this area around 66,000. I went long, and I'm very curious to see if this thing is just going to continue. I know we did this experiment last week where we drew our trend lines differently here, depending on which way you drew it. Question is, have we broken out or not? We'll see. But I think that if you start to see this thing kind of take out those highs again if we take out those highs and we're clearly above this downward momentum, we may be starting to see Bitcoin pick up again. I think that, from a fundamentals perspective for just a moment, the concept of, the Fed is cutting rates, inflation's cooled off a bit, the consumer feels a little bit better, company earnings are looking a lot better. All of those things sort of take me back to 2021 days where things were mostly pretty good and the market in general, risk on assets performed very well. So maybe Bitcoin will do that. Maybe it won't. But I think that there may be the potential here for a kickoff to this bigger rally that we saw take place in October and November of last year. That was about the trigger time that we saw a huge run up in Bitcoin. Maybe we'll get a repeat this year. I'm not sure, but it's one that I'm watching. I know we talk about it frequently, and usually we have not a lot to say about it, but today specifically, I took a trade, so I just wanted to share it with you guys and talk about it. So, Miko, any thoughts on Bitcoin? Are you watching this one at all?
I'm keeping an eye on it, definitely, because it is trading at that high. It was a very interesting move yesterday because price was looking pretty bearish at one point, but by the end of the day, it just pulled back and left a big wick. So I'm not quite sold yet on the breakout just yet, but it is showing some promising signs. The key thing I'm looking for is the break of this high here, which we kind of failed previously. So if we can get above 69, 70K, then that's when it's obviously bullish. But at that point, I think looking for some pullbacks look quite safe because at that point, the breakout is really in your face. And we're probably seeing some big candles above that. So that's kind of what I'm waiting for to really get behind the breakout. But we are sort of trading above this channel here. So it is a sign that potentially price is getting ready for such a move, and especially with that wick there as well. So with me, I'm going to wait to see that if that 70K area breaks. If it does, we could really see Bitcoin take off, and we could see some similar price action as to what we had back down here. So if that's the case, we're really just looking to wait for those pullbacks and anticipate more upside. But if you were to come back inside the range, that's when things get a bit more awkward, and maybe you do see a swing to the downside. But yeah, if 70K breaks, I think that could be lights out.
Fair enough. Yeah, no, I think that's 70,000. Is that, we've never made it to 70, have we? Or have we? Yes, we have. We made it to all-time highs, 73, 74 range, at least from what I can see. Yeah, that'd be interesting. I mean, from a longer term perspective, if you pull up like just a weekly chart on Bitcoin, I'm totally there with you. Because like if you see this thing just take out these previous highs, it's going to start drawing in the attention of all the sleepy Bitcoin, viewers. Once the thing starts taking out the highs, it's like it triggers the herd mentality again. So we'll have to see. Marco, same thing to you. Watching Bitcoin at all?
Yeah, definitely. It's heating up. It's doing something. So better than last few weeks. On the daily chart, we said it broke that trend line that you just mentioned. Again, I'm looking definitely at the major high to get that confirmation of the big uptrend. Until that happens, I'm still not massively convinced, but it is good that it is moving up and that it broke out of that trend line. So I am seeing a bit of development, but still not 100% convinced. And what are you targeting? Are you using like a trailing stop loss, so same as your other entries, or some levels?
Definitely trailing stop. So this one, I'm just using my kind of standard momentum approach. So I've got a stop loss below lows here. What I'm looking for in terms of where I would start trailing stop pretty aggressively would be if we take out this previous high on the 4-hour chart around 69,569. If that happens, I'll look for opportunities to start trailing stops tighter into profit and just kind of ride it for what it can do. I do have, kind of two primary strategies that I use, more of a mean reversion option strategy and then my momentum strategy. This one's definitely more on the momentum side. I think we've got some nice momentum picking up for Bitcoin. It's a question mark though, because we've really got to start to prove it here. We do have some resistance points, but on the 4-hour chart, I think we have a good shot at potentially taking out those highs, especially given, like I said earlier, a bit of a positive fundamentals backdrop. I think that we've got a decent environment for risk assets to do okay. So we'll have to see. question for you guys next is the yen pairs. Yen pairs been moving up quite a bit here recently. I'm curious, Miko, what are your thoughts on these ones? Are you watching any of the euro yen, pound yen, dollar yen?
I'm keeping an eye on the yen pairs because they're trading at some really big levels on the weekly chart. And I don't want to cement a bias just yet. I'm kind of waiting for the weekly candle to close. But CAD yen, euro yen in particular, really big level trading up here. And these are kind of like turning points for the market, at least for me anyway, because if we were to break above them, then I'll be looking at a lot more longs. But if we do hold these areas, then I'm expecting a bit of a bearish trend to form. And then I'll just be looking to catch some pullbacks to the downside. So we're trading at some big areas, and depending how price looks by the end of the week, so how this weekly candle close, it will then dictate my bias, especially for dollar yen as well, trading at a really, really big level here, around 152. So if this candle was to say close really bullish above it, that's a sign of momentum breaking through the level, and then possibly next week we see continuation of that. But if we just leave a big wick there and say price closes somewhere around here, that's more of a sign of rejection, and we could be looking at turning around. So I'm kind of on the fence with the yen pairs. I need a bit more information before I have that bias. But once I kind of register what price is trying to do at these areas, then that will make my job a lot easier. But yeah, I'll probably have a bias for next week. But for now, I'm kind of still on the fence.
Yeah, and just looking at those weekly candles as you were going through them, it does seem to be some wicks forming on the top there of dollar yen, pound yen, euro yen, all of the yen crosses. Big pop here to start the week, but we'll see how they close, because if they do close with a very long wick on the top, yeah, we could see some downward pressure. But as you mentioned too, if you close very strong here, that would definitely signal, in my view, more strength here. So we'll see how that plays out. What about yourself, Marco, in terms of yen crosses? Take your pick, whichever one you'd like to look at.
Yeah, we're going to cover EJ. So EJ on the 1 hour chart broke out of this really flat range. So I have been closely watching EJ the last couple of weeks. Has been pretty flat, finally broke out with some decent momentum, I would say, which was a very good sign. I didn't get any high probability buy setups, but I definitely liked this momentum on that 1 hour chart. Right now it is correcting a bit, printing some bearish pressure, which is not the best. But again, if we can continue with the buying, continue with this sort of momentum, I will definitely be interested. It's a much better story this week than the last few weeks, because the last few weeks on the 1 hour chart at least have been pretty corrective. So I always like to see some momentum kick in. It's usually a good sign that a bigger trend could potentially start. And as far as I remember, the fundamentals switched a little bit from being bearish to now bullish. So that's a key factor as well. That's also a confluence for an uptrend.
Yeah, and that's an interesting concept on the fundamental side, with some of the yen pairs starting to show up a little bit higher on the list when it comes to the Edge Finder's top setups. The reason that may be too is that some of the concepts with the yen are, it typically does well when the world is a little fearful of the global economy. If back in when we saw that huge tank back in August, that August 5th drop was largely because we had a really bad NFP report. So the US jobs data looked really sour, and then everybody was like, oh my goodness, let's get into the yen. That's the safe haven / people who were very short the yen covered rapidly. So we had like a short squeeze plus demand for the yen happening at the same time. And that caused the yen to get very, very strong. Now it's a question of, with yields coming up, this is another sort of correlation that can be fun for those who are interested in that sort of stuff. I'll show my screen here. This is a fun correlation to learn about. Yields in the US have very strong correlation to the dollar yen. So take a mental screenshot of the US 10-year Treasury bond yield. And then if we flip over to USD JPY, you can see it's pretty similar. The direction here is pretty similar. And US Treasuries trade heavily off of how the US economy is performing and what expectations are for inflation. So just interesting to kind of cross over. If you want to get really fun, I mentioned that treasuries have correlation to the yen. Well, treasuries also have strong correlation to oil. And this is an interesting one too, because oil, and now I'm going off my tangent here, but the reason I bring this up is that if oil spikes a lot, it's expected that inflation could go up. If inflation goes up, treasury yields go up because people are like, I'm not buying your bonds unless you pay me a lot more. So yields on bonds goes up too. So one thing I will say, regardless of, fundamentals, technicals, market correlations, whatever it is, I think all three of us can agree that after all these years that I've been doing this, I'm learning new things about the markets all the time. And I'm just fascinated by how deep this spider web really goes.
True.
It's crazy.
And could you mention the Bank of Japan intervention a bit? I think the last big one was in July, wasn't there?
Yeah.
Do you expect any more? I think more interventions are not expected.
Well, one thing about the Bank of Japan that is like fascinating is that contrary to like US central banking or European central banking, which they're a little bit more like transparent, I guess, on what their plans are, the Bank of Japan holds their cards close to their chest, which is very interesting. So that's why the yen intervention stuff is so violent, is because when people don't see it coming, it can cause such massive movements. So yeah, it's been a while since we saw, I mean, this definitely looks like intervention stuff, right? And then we had intervention stuff over here. And that's when, the Bank of Japan is like, we don't like where the currency is trading against others. That being said, it can happen at any moment. There's still recently they're talking about some change of leadership within the Bank of Japan, and that change of leadership, people are trying to speculate on how aggressive or not aggressive would the new leaders be in terms of intervention, because that is a decision they make, right? Are they going to buy a ton of their own currency to try and support it? So we'll see. But that's the thing with the Japanese yen. What makes it a very volatile and tricky currency is that yen intervention stuff can happen at any moment, or it could happen never. So that's what makes it very difficult to try and time these things. And I know that we typically all, we're not trading like the 2-minute chart or the 1-minute chart. So at least you can avoid some of the craziness. But when those intervention moments happen, everybody kind of stops and stares. That's for sure.
Yeah, what I read is that the Bank of Japan doesn't like to gradually pump the yen, but they take 20 billion and then they just pump it in all at once, and then you get a chart like this where it's a massive move down. So they're a bit crazy.
Get like a big bulk market order by them.
Yeah.
No, it's
their
crazy.
style.
Well, guys, I want to thank you both for coming on the show. Before we end out, we crossed through most of our markets for the week. I just want to mention to everybody who's listening, Miko and Marco both have their own social medias. We're going to be dropping the link here in the chat. Actually, it is already there for you. Miko and Marco, you can find them both on YouTube and their own social medias. You can search their names, find them on socials. Make sure to hit them up, follow them. They do offer their own services as well. If you guys found value listening to their style of trading, they are more technical. They keep it real simple, which I appreciate quite a bit. And I know a lot of you guys do as well. They keep it straightforward and they put great content out for free. So make sure, go follow, go subscribe Miko and Marco on their own channels. Thank you guys very much for coming on the show, and we'll see you next time.
Thank you.
Appreciate it.
See you. Goodbye.
See you guys. All right. And pushing on here, guys. Let's see. Where are we at? We are at 9:09. We've got 5 minutes before our next guest shows up here. I wanted to come back and leak some more cool stuff about the stock box. I talked about it for a moment earlier, but let me show you this. So the stock box is our brand new tool. We've worked on it for the last year. We've been working on this thing constantly to try and make it the next big thing for stock traders. Now, you guys are familiar, most of you are familiar with the Edge Finder, which is our Forex and futures tool, but we just kicked off. We just announced early information coming out about the brand new stock box. The cool thing about the stock box is if you trade things like sectors, I'll give you a real current example of a trade that I took using the help of the stock box. The top sectors page is one of my favorites. It takes a look at all of our macroeconomic data like GDP, PMIs, and instead of rating gold or NAS 100, we've actually got it ranking individual sectors. So we're talking about things like energy companies, financial companies, technology companies, semiconductors, industrials, utilities. All of these things are getting ranked by the stock box's new feature. Now, I actually took a position on XLRE, that is a real estate ETF, and I'll pull that up. I liked this pullback quite a bit. I went long XLRE at this pullback here. And so far, we've got a pretty good trade going. We'll see how this one plays out. But I just wanted to show you how I'm already kind of using this tool. We've been working on this thing for, like I said, about a year now. And behind the scenes, we've been trying to get this thing up and running. Let me show you some cool features within it, though. We have the 13F portfolio tracker, which this is a beefy thing that is currently being worked on. So there's a 50-50 chance it loads or not right now. When it's being edited, it loads very, very slow. So it could be being edited right now. But the 13F portfolio tracker will let you basically look at what big money traders are buying and selling. Similar to the commitment of traders data for Forex and futures traders, the 13F portfolio tracker allows us to see which stocks institutional hedge funds and money managers are buying and selling quarter to quarter. And this is a really, really cool thing. So we can read this real quick. We can see when we take a look at our fund managers that we track here, you can see that they bought a ton of Apple. Actually, I'm sorry. They decreased positioning in Apple stock. They increased positioning quarter over quarter in Microsoft. They bought more NVIDIA. They bought more Amazon. They bought more Eli Lilly. They bought more SPY. And what we're looking at here is the overall aggregate positioning of all of these different fund managers. I'll give you one that we all will probably know right off the bat. It's Warren Buffett's firm or company, Berkshire Hathaway. So basically within the stock box, we can select for Berkshire Hathaway and we can take a look at their portfolio in detail. So you can see right here, they actually decreased their positioning in Apple stock. So if we go take a look at Apple stock, let me go pull this up. They actually sold Apple stock in the previous quarter. So Berkshire Hathaway, Warren Buffett and his companions over at his company sold Apple stock and basically added other things. So they bought Bank of America, they bought American Express, they bought a little bit of Coca-Cola. Let's see, what did they do? They sold a little Chevron. They sold a little Oxy, which is one of his favorite long-term companies. And basically, we can see all of these different things too by using this table down here. So biggest sells, he sold Apple, he sold Kraft Heinz, he sold Snow. We flip this around. We can also see the other side as well. Bank of America, Coca-Cola. These are things that he bought. So really cool to see. I mentioned this earlier. If you guys would like to get early information about this tool before it launches, we are still in late development phase of launching this product. If you remember, you may or may not have been watching this far back, but back in the day when we launched the Edge Finder, it did not look nearly as good as it looks today, but we offered it at a very low starter price. So if you are interested in this stock product, the stock box, which is going to be available in the next coming weeks, we are offering mega low prices that will be raised. I can guarantee you one thing, the stock box product price is going to go up substantially, but early access users help us out. We give you a discount in exchange for your feedback, for your help in making the tool better. And it is an actively developed product. This is kind of like a early access release version. If this is a tool that you think would be beneficial to you, here's how you can get early information. We'll drop the link here in the chat right now for you to get early access. Here it is. Fill out this form. Takes 2 seconds to just let us know that you're interested in trying it out early on, and we'll get you access so that you can try it, see what it's all about, give us some feedback. All I ask is that if you do get the early access discounted price, that you take it seriously, that you try this out. And if you're a stock trader, an ETF trader, an options trader, we want to hear from you. We want to make this tool as good as the Edge Finder has gotten over the years. This is our next product that we are working on for stock traders. So there you go. Now, guys, we've got our next guest coming in here in just a moment. We've got Forex James coming on the show. So we'll take just a very short break here. And then right after that, James is taking over the show. Stay tuned. We'll be right back. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello, hello. How's everyone doing? Hope you're all having a great end to the week. Let me just sort my camera out. There we go. Cool. Let me just share my screen here before we go any further. There we go. So I saw quite a lot of people talking about gold. Now, before we start, I'll show you my position on gold, or the old position. So after yesterday's sell-off, decided to take a long position here on the after the bullish engulfing candle. This was quite late. This is normally later than I would start opening positions. Woke up this morning and it was still at entry. And accounting for the fact that we also have the US news today, I was like, you know what? It's just not worth holding. It's not worth the risk in my eyes. Even though I was very confident it was going to go up, it was just that addition of the news, I just wasn't satisfied enough to hold it. And now in hindsight, you know, it's one of those things, if only I held, I could have been in great profit. But, you know, our job is capital protection is number one priority. So that's about it. In terms of portfolio, I am completely flat. So let me show that in a second here. It's funny, actually, someone yesterday told me to download the MetaTrader app rather than the, you know, the sort of third-party software. So I've got this here. So portfolio is completely flat today as we end the week. Took a short position on euro dollar this morning. However, obviously we had news, so closed out for, it was only 0.3% profit. Take profit was originally down here, but then I saw on the currency indexes, the US dollar started to take a turn to the downside. Euro started to take a little bit of a push to the upside, and with US news, it just wasn't worth the hold in my eyes. So cut that one quite quickly. But yeah, I mean, going back to gold, I think there's not really any problem correcting the move that we saw yesterday. It seems like it was just profit taking. There was no significant news at all to really drive that. So again, it just looks like some larger parties in the market wanted to close some positions. So that's all it was really. However, of course, we do have manufacturing PMI and services PMI and new home sales coming up soon. So that will affect gold as well. But overall, I think, you know, whether it's today, tomorrow, Monday, Tuesday, we will see a correction of this move eventually. Will we reach new all-time highs today or tomorrow? Let's say 2770. I don't know. We'll see what the US news says. Possibly, but I think that's a little bit of a far target, especially for today. If we get weaker US dollar news, it would obviously help, and then maybe by tomorrow we could reach that level. But I think looking for it today is a little bit far-fetched in my eyes. So according to you, it will go up. Gold secret strategy. The secret strategy on gold is have at least 500,000 in a portfolio and just buy. Just continue buying gold. It's a great investment asset. So that's the secret strategy to gold. Before I take some chart requests, what I'm going to do is just show you guys a little bit of behind the scenes of the Forex trading or the trading industry. So this week I've had probably one of the best weeks ever that personally I've ever had. So I had a nice 1% here on euro dollar. I had 2% here on pound dollar, and then I had another 2.65% closure here. And then I made another 1% here on oil yesterday. Well, closed out today. So, you know, on the face of it, everything looks great. I look like an amazing trader, profits flowing, made about 5.5% this week. But, and this is where the big but comes in, that a lot of people won't show you. I could sit here and say, I've made this huge percentage gain this week, join my signals, But what I'm going to show you is the whole month. So this month actually started extremely poor. We hit, in the signals in our Discord, we hit a drawdown of about 7%, or even slightly larger than 7%. Luckily, well, I shouldn't say luckily, but of course, you play the stats, you play your strategy, and we're now back to just under that with one open position here. So we've actually balanced out quite nicely. We're back to almost break even. So although I had, again, a great week, it doesn't mean everything is sunshine and rainbows. And again, you can see it here. So I didn't update you guys on this MyFX book. I showed it not too long ago, I think probably at the start of this month. And it was up, I think it was, probably about 4.77% at the time, and then hit a peak of 5.48. And during this period, it was just a waterfall to the downside. So I actually reached a max of negative 7% in equity, which, if you account for negative 7%, doesn't sound awful. But then when you say, it was 5%, then dropped down to negative 7, that's a really bad drop. And now, again, it's back to almost break even. So you can see this, last month was 2.35. This month is negative 3. So I'm not going to sit here and try and show off all these wins and not show you losses as well, because I think that would be very unfair, especially to any new traders in here. So there you go. I just wanted to make that very clear that, although, again, this week looked great, it's not always perfect. So let's move on to some chart stuff here. Let me just read the chat here. No secret for XAU, just structure and KIV where roadblock or pause at following move. Not sure what that means, but yeah, fair enough. I took shorts on AUD CHF based on H4. Let's have a look at Australian dollar Swiss then. H4, you took shorts. I assume you mean the break of this. Took shorts AUD CHF and consolidation, but I don't really see bears following up. Could you have a look and give me a review? To be honest, this trade, in my view, is more bullish than bearish. So what we've got is the commodity prices are still holding up quite well, which obviously benefit the Australian dollar. Chinese stimulus, wasn't super effective, but it's still a factor. Things in the Middle East don't seem to be a huge issue at the moment. So, the flow into safe havens isn't as drastic as it was. So overall, I'd more be looking to go for long positions here, if I'm honest. But, I'm not saying I am going to buy. I'm just saying overall, I would more be looking to go long. Best time frame for gold, Arshad. That's something you need to work out. Different time frames work great for different people. Congrats on the comeback. Yeah, I mean, it's just playing those stats, isn't it? Every strategy, every trader has those times where it's drawdown. It's just typical. It's as soon as I open the MyFX book. But like I said, almost back to where we were, so no issues there. DAX, we can have a look at DAX. I'm a little bit annoyed actually about these indices. So if we look at the S&P, I think I called this one yesterday on stream and I just didn't take it. I completely forgot actually to even check this market this morning. And it came down to this 50% level perfectly, retested this trend line perfectly. It was, again, perfect trade essentially. But yeah, unfortunately, I missed it. It's a similar thing here on DAX. Again, I've been looking at DAX for such a long time, waiting for this trend line to get hit. And I was too focused on my other strategy on the day trading side, completely missed the entry here. So looking really for maybe another entry somewhere slightly lower near the entry point, somewhere maybe here. But yeah, generally speaking, the indices market is still very bullish. We've still got the Nikkei, DAX, NASDAQ, UK 100, Dow, S&P 500, and the Russell, all still with bullish readings on the Edge Finder, which is great confluence. So yeah, definitely not looking to sell these markets. I think if you can find your edge here, find some sort of technical entry, it's definitely a good place to be. James, your opinion on possible entries as we are close to closing weekly. There is no entries for me. I'm completely done for the week. My portfolio is flat. I've got no open trades. I am done. So the problem is, I'll explain why. What we've got is this week has been, I'm going to say easy money because it has been for me. It was, my strategy was in play perfectly, as I already showed you. This week was great. With obviously the dollar on its rally, the yen to the downside, pound to the downside, euro to the downside. It was very clear, especially for shorter term traders. But if we look now at what pound dollar is doing, oversold on the daily, we've had very little pullbacks. We're now sort of in a support level. I mean, it's not super strong, but it's still something I want to keep in mind. Pound dollar is not the best example, but then euro dollar, if we look here, we've reached this level of support through here, and again, RSI is oversold, very deviated from this moving average. So although I am still looking to go short, I'm just now I'm sitting on my hands a little bit and waiting to see if we can see a pullback that would then allow more of a swing trade to the short side, rather than having to go and constantly look for these day trades to the downside. Good day, James. Euro yen, any input? Broken resistance on the H4. Let's have a look. How have your weeks been? Have you guys made money? Have you lost money? You break even? How's everyone doing? Let me know. Let's see. Euro yen. Yeah, I mean, I've been, again, I'm going to start, I say this basically every stream I come on now, but I sound like a broken record saying I think the yen is it's on pretty good ground to correct this whole move now. I heard Nick and the other guests speak about an intervention earlier. And while an intervention doesn't seem super likely right now, it wouldn't surprise me if we do see one soon. And the reason is because the yen has failed essentially. So what we saw was this huge move to the upside. I'll repeat it again, but we've had unwind of carry trades, intervention, hawkish BOJ, change of leadership, and that's all fizzled out. It's led to nothing. We haven't seen any sort of sustained movements within the yen. So if things carry on as they are, we will see a full correction back down to where we were, and maybe even lower. Now, does the Bank of Japan want that? Not necessarily. So interventions aren't made to change the course of the yen. They're not. It's just not the case. And interventions are very expensive. Every intervention they do, they lose money. So they're not going to do it just because they want to. It's more a case of if they need to slow down the depreciation of the yen, which I would expect as soon as we start coming into this sort of level through here, we might start seeing sort of risks. And that's when I'll start being very cautious. But until then, and again, this is best guess. I don't know. No one knows for a fact. It's just what I can see. So yeah, anyway, to get back to your point, I think all of the yen pairs, euro yen, pound yen, dollar yen, Australian dollar yen, you might have to sit through a little bit of choppiness and drawdown, but yeah, in the long term, I don't see any issue going all the way back to sort of the pre-risk off move or the pre-unwinding move. Hi, James. London sessions opens at 8 a.m. GMT. Is there a pre-London session? And if so, at what time? Ian, you're asking the wrong person, to be honest. I am very linear in the way I trade. I don't trade stocks, don't trade crypto, don't trade sessions. I'm probably the only day trader that doesn't trade sessions, actually. I just trade what I see and what the economics see. I don't care about time. I think, the way I trade is just not based on time at all. Hi, James. I normally see you using MyFXBook. Is it paid or free? MyFXBook's free. You can pay for it, but there's no need to. It's the free version is fine. The only reason you really need to pay for MyFXBook is if you need constant updates on portfolios. So, for example, if you have investors or something, which for average retail isn't necessary. Hi, James. How do you choose your trades with daily bias? I struggle with that the most. I look at the charts in the morning and my head starts spinning. How do I decide? That's a good question. So I'll be honest, it's very simple, but it depends how complex you want to get. So for example, if let's say you have the Edge Finder here. So you've got euro dollar bearish. Already you've got your bias. Okay, I want to short euro dollar. How do I get in? Well, we can see the daily's bearish. Obviously, it doesn't take a genius to see that. So we're looking for shorts. The daily's bearish. That's two things already. The H1. All we're doing now is looking for a pullback. So for example, here we had a pullback to the 50 EMA. We had the RSI oversold, took the position, and bang, take profit hit. So it's very, very simple, but it's easy to get chopped up. If you don't have a clear reason to go for a short. So for example, if you're not looking at the economics, if you're not looking at the trend, and you're just looking at candlesticks on the 15-minute, then you've got no hope. Trading is about having an edge, and the more things you have in your favor, the better. So don't try and limit yourself to just looking at candlesticks on the 15-minute. It just won't work in the long run, anyway. Euro Swiss. It's a good thing I closed this euro yen position. Sorry, euro dollar position. Nothing here. I would expect it more to be bearish than bullish. I'm pretty bearish on the euro overall. You know, I say this every time. We've got the aggressive rate cuts by the European Central Bank, and we have weaker eurozone data. And the Swiss, you know, it's a safe haven. It's never really going to be overly weak or overly strong. It's kind of it's a very stable currency to hold. So looking at both of them, I would more go to the short side, but technically there's nothing here. I mean, the first take profit would be in this zone. So if you're looking to short, you've really only got a space of, let's say, take profit here. You've got 55 pips. So it's not, in my opinion, there's nothing to do there. I use on day trading here, I use the 21 and the 8 for the daily trend on the daily time frame. And then I use the 200 and the 50 on the H1 and the 15 minutes. On my swing trading here, I just use a 200 on the daily and the weekly, and then a 50 and a 200 on the H1 and the H4. Bear in mind, they're two completely different strategies. They're meant to help counteract each other and balance out exposure and risk and things. AD Cadbro, it's ready to reach that daily high. Do you mean the current daily high or the previous daily high? Let's see. AD CAD is ready to reach that daily high. It doesn't look like it to me, to be honest. Looks quite bearish to be, from my point of view anyway. Opening position on gold. Gold touching all time today. Let's see. Yeah, gold is on a serious run here. It's a shame, really. It would have been nice to see a deeper pullback. But it's just so difficult to get into. Yeah, I'm still upset about my gold position, but what can you do? I didn't lose money, so that's the main thing. So let's see what's going on here. So euro dollar actually looks really good on the daily. So we are finally seeing some bullish movement. So if we can come back and retest this resistance, let me draw it up here. So if we can come back, retest here, and continue to the downside, that would be a perfect situation, really. That would allow the 200 moving average to catch up. It would meet previous structure, and it would be a retest, and it would be a chance for price to just relax a little bit and allow some sellers into the market. Because at the moment, it's just so overextended. There is no way for anyone to get into this unless you are sort of scalping or day trading it. But yeah, we might even see profit taking on euro dollar as well. So keep that in mind. That's why I'm not really looking to place any more trades. Bitcoin, yeah. I was watching Bitcoin actually. I saw Nick had a position, but thing is, my entry was just a little bit lower than his. I was looking for this 50% level, and I guess really I should have had my fib here. However, you know, I just wasn't really paying attention to Bitcoin. It's not something I pay that much attention to. So yeah, I think, yeah, it's difficult because I guess we're in two sort of different trend lines here, or descending areas. We've broken out of one, but we still have this larger time frame or larger one here that has been rejected. But price seems to be, you know, on a rampage to the upside. Doesn't seem to be slowing down anytime soon. So I'd be more than happy to, if I was in buy positions or long positions, I would be happy to hold them. But yeah, I wouldn't enter right now. I think you missed the opportunity, really. Why gold up? US data are good. It should be down. Toby, yeah, I mean, that's the question a lot of people have had recently, and it's because the dollar and the and gold aren't linked the same way as, you know, pound dollar or euro dollar. So yeah, while the US data has been good, the dollar is still down today. So you can see here. Don't forget that, yeah, we had relatively okay data, jobless claims, better labor market, but it's not really enough. Gold is still an attractive safe haven. It's still got all the reasons to go to the upside. We've still got elections. We've still got tensions. We've still got rate cuts. So gold has got more than enough reasons to continue. How do you balance swing while doing day trading? Quite easily, really. I only really go into my day trading if I don't have any swing trades opportunities. So for example, euro dollar is a great example, and pound dollars. I couldn't get into swing trades here. So the alternative was to get in using day trades. So it's not two strategies I will really use at the same time. It's one or the other. Oil. Yes, we can go over oil. Chill. Yeah, so I had a nice run on oil, secured, yeah, about 1.2% roughly. The problem with oil that I have is there's nothing clear in terms of the fundamentals. There isn't any real reason for it to move either way, in my opinion. We've had positive inventories from the US, which obviously decreases demand, decreases the price. Tension in the Middle East, again, they're not a super prevalent thing at the moment. There's nothing really escalating, although the risk is still there, thus pushing price up, having the potential to push prices up. So it's kind of mixed. There's no real opportunity for me there, personally. What do you think about PMI data? Let's have a look. PMI's in 20 minutes. Looks a bit mixed. So 55.2 is previous, expected, forecast 55. Previous is 47.3, forecast 47.5. I would expect this to be overall quite positive for the dollar. But yeah, again, we'll see. I'm not in the job of predicting news. I never saw your profit from swing trades, only day trades using pivot indicator. Yeah, it's because I actually have not had any swing trades for a while, to be honest. I've more levitated is the right word, I think, towards day trading because it's quicker. I can get the same profits, if not better, quicker. And to be honest, it's so much easier. I'll take swing trades if there's some, you know, if I've got a really good, strong forecast. But at the moment, I'm quite happy just with my day trades. What do you think about gold? We've already covered gold. I think gold is on its run. Nothing you can do unless you get a great pullback. Even for short-term trading, there's no opportunities. What is the risk percent on a position for a funded account? That's a cool question. So I suppose there's three ways you can do it, or the three ways that I would go about it is there's one where you just risk 1% every trade, or 0.5, you take it very slow and steady. There's the second way where you could risk, so you risk 1% on your first trade. Then on the second trade, if there's a 1% trade here, if this works out, you would go for a 1 to 2. Then with that 2% profit, you risk all of the profit. And this is more aggressive, of course. So you'd risk all of this profit to make 4%. And then after this 4, you'd risk that to make 8%, and then you'd pass. So essentially, you'd only need to take 4 winning trades. I know that obviously on paper sounds great. Realistically, can you do that? I don't know. That's a very aggressive way. But the thing is, if you don't have a daily trailing drawdown, it doesn't matter, because if you lose 4%, you're back to square one. So you've not actually done that much damage to the account. And there's the other one where you would risk, let's say 3% on the first trade, and then no matter what the outcome is here, you risk 1% afterwards. So if this is take profit, then you've got a nice boost towards your profit target. It might be, you might get 6% from this, or you might lose 3%, and you just go back to risking 1% to get that back. But yeah, I think with prop firm challenges, unless you really need to pass it, and like paying your bills depends upon it, which it shouldn't ever. But if that is a situation, you obviously need to take it very slow and steady and make sure you pass. But if you're doing it just to get some extra income, just for some funsies, and you can afford to lose it, definitely just take an aggressive approach, get it passed, and try and get the refund and get a payout. Why do you trade prop firms? I do trade prop firms. I passed one for, I think it was 100K, and then I blew it the same day because it was when the yen, the unwinding happened in the carry trades, and I was long on a lot of yen pairs, so reached the daily drawdown limit. So I just don't like the overall rules. I don't like having to stick to those, and I think prop firms are very shady. I think if you prove that you can make money, they will do everything they can to try and stop you. They will look into every single trade you put one foot wrong. They'll ban you. They'll reject payouts, unless you're a very reputable one. But generally speaking, I think they're all scumbags. Bearing in mind, it is just a big Ponzi scheme. Unless they're backed by a broker like Blueberry Funding, or they're something like FTMO, all of them rely on you failing. Obviously, there's a conflict of interest there. Man, we are the same, bro. I got funded 100K and blew it the same day because of unwind. Yeah, it was really unfortunate. It was the day I decided, I was like, yes, let's go into the yen. I'm finally going to get into my carry trade. I'm going to hold it. And that same day, it unwinds and everything just goes to pot. Do you always refer to currency strength index like DXY, JPYX before entering a trade? Yes, I do. Well, for day trades, yes, not for swing trades. The reason is because if I'm looking to take a trade just for 1 to 2 days, I want to see what the momentum is for each currency for that, for the day, for the previous day. I want to see what's going on. Whereas a swing trade, normally they're driven by more of a macro aspect. So I don't really care what it has done. I care more what's my forecast, if that makes sense. Breaking news. 4 minutes until PMI. So yeah, we'll see what happens there. I'll keep that on screen. Actually, let me just check how long I'm on for. I don't want to run into someone else's time. 9:15. Okay, cool. We've got enough time. We can go over watch the news together. I'll put these on candles. Where is? Yeah. There we go. We'll go on to the 15. Let's put this over here. And then we can put this all the way over here. We can do that. There we go. Oh, wait. There. That should be good. What's your forecast on US 30 Dow Jones? I was long. Yep, I'm not long, but I would be going for longs. James, you ever tried FTP Plus? I'm not sure what that is, Lee. Is the 5 as good? I don't know. Never used them. I've only ever used one prop firm, which is the one I passed. I'm not going to mention them on here because I'm not, have no affiliation with them, but they were okay. If you want to know them, then just send me a DM. I'll tell you in private. I'm not here to shill other people's companies. But yeah, I think if you are going to go for a prop firm, make sure you've done your due diligence, because it's very easy to get scammed. Oh, we've got news. Let's see here. Yes, good good for the dollar overall. So we had previous was 47.3, came out at 47.8. So we've had an increase. On the manufacturing PMI, we had services PMI come out at 55.3. Forecast was 55. So higher, the better, essentially, for the dollar. That's a general way you can look at PMI. So if we get, obviously, again, higher numbers, better, lower numbers, worse for the dollar. So mixing that with the good jobless claims, I think we're on a pretty good track for the dollar bullishness to continue overall. So we've got more signs of a good labor market. Manufacturing PMI is good, services PMI is good. That leads me to stand on the fence completely of either, sorry, not either, but a 25 basis point cut. Let's see what's Fed Watch. Let's have a look. Give me a sec. So yeah, okay. I think it's overwhelmingly the same. No, Lee, never used them. US 500 up or down today. We can go over that in a moment. It looks like it's up though so far. What do you think about building a portfolio on Darwin X or FX book? Nathan, I think that's the best thing you can do. It's the best decision a retail trader can make. So with Darwin X, there's multiple positives. There is obviously the first one, you have an undeniable track record. The second thing is you can get payouts, so you can get real investor capital, not like prop firm nonsense. And you can actually sell your strategy essentially. So I was speaking to a friend of mine. He has a friend, so a friend of a friend. He has a guy that essentially he gives signals to, I think it's a hedge fund. I think it's a hedge fund. Now, when I say give signals, it's not like buy here, sell there. It's a bit more professional than that, obviously, but he tells them what trades he's taking, gives them the full documentation for the trade reasoning, and he gets paid like $50,000 a month for that. So yeah, essentially Darwin X is great. My FX book is also great if you are okay trading your own funds. I think the problem with Darwin, one reason I don't use Darwin is because of their drawdown rules. I just don't understand it. And I think maybe it's just me being a bit stupid, but I just don't understand how they calculate drawdown. I had a trade on that was fine. I think I had 2 stop losses and it said I was down like 4.5%. And it just made no sense to me. I don't know how they figured out that metric, but anyway, it is what it is. Anyway, sorry, that was a bit of a tangent. So let's see what's going on with here. So euro dollar actually hasn't had much of a reaction. It seems like the news today was kind of muted. Nothing too spectacular going on, really. The yen pair's been on a rampage. Let's see here. Yeah, I'm a bit upset about this. Actually, I wouldn't mind going into dollar yen at some point. Not quite yet. I'd like to see a little bit more of a pullback. We are around 3% above the 200 moving average, which for me is more of an indicator that we might see a slightly lower price as we see. I don't want to call it a mean reversion, but a slight just pullback, I guess you could call it. So yeah, at some point I will get into this when I can find an entry. Kyle, that's a great point actually. Problem is well, not the argument, I guess, but the rebuttal I have to that, which annoyed me, is that your drawdown on Darwin X reflects to investors, so it can really affect obviously your allocation that you're given. So it rubbed me the wrong way, and I don't need Darwin X. So it was more a case of, well, it just annoys me, so I'm not going to do it. Can PMI affect gold? Yes, we can have a look at gold again. Yeah, you can see actually it's had a bit of a negative effect as we're seeing a more strong dollar today, or better dollar news. The dollar actually isn't doing too hot still. I mean, obviously it is in the grand scheme, but I just mean today it's still slightly down. But yeah, gold more than likely is going to, let's see actually. that's interesting. Technically, gold actually does look like a little bit of a sell. I'm not going to sell gold. I think that'd be ridiculous, just for my strategy. But yeah, for generally speaking, the way their risk algorithm works does mess up drawdown and other stats. Yeah, I think they tried to be quirky and they kind of messed up. No, I'm joking. Obviously, I'm sure there's method behind it, but for me, it's not the best. Do you think it's a good idea now to long Bitcoin? Let's have a look. I wouldn't. I think, to be honest, going long now, it's a little bit risky. We've just had news and we've just hit resistance on the H1. So I'd really be waiting for something. So to be honest, I'd wait for either this daily candle to close. If it's an engulfing candle, then maybe you could go long after that with stop loss somewhere here and a continuation to the upside. That's basically all I see at the moment. I think we've kind of missed the opportunity to buy this dip. For now, anyway, we might get another one. Yeah, we can have a look at copper in a moment. Hey guys, I've had good success going long on blue chips with CFDs, but the overnight swap fees are crazy over time when holding. But I hear that futures have no overnight fees. Does anyone know? Cameron, yes. As far as I'm aware, that is the case. Yes. So yeah, if that's what you're wanting to do, I think futures trading is probably better for you. Someone asked for copper. I was looking to short copper, but I just wasn't 100% certain about it, really. But yeah, I think copper is going to continue its run to the downside, really. There's nothing to support copper. It went for a great run when we had the Chinese stimulus, but now that's faded. There is very little demand for copper. So it wouldn't surprise me if we do see the 4.32 level get hit. So I'm more waiting for an entry to see if I can get down to this level. But yeah, at the moment, there's nothing here for me. But yeah, copper bearish in my book. What's your opinion on taking out a loan to trade it as possible? I think that's a terrible idea. The problem is trading isn't guaranteed. So if you take out a loan, let's say for 50,000, there is absolutely nothing stopping you from losing all of that money. Then you've got to find another 50,000 and pay back the loan. Pay back the interest on the loan. So yeah, really not a good idea. I think and even this is very risky, but the only way you could really do that is if you got a personal loan from like an investor or a family friend and said, look, give me X amount, and I'll give you X amount plus 20% in 12 months time. But again, even that is very risky, and I wouldn't suggest doing that. Hey James, what's up? Thoughts on Australian dollar? I think Australian dollar is supported at the moment, but it's definitely not as strong as I would like it to be. I believe this is bad for the dollar because of its safe haven status. I disagree that the data came out. It's good for the dollar. Fair enough, Jacob. Let's see. I mean, the data would disagree with you, or the candle would disagree with you, but I understand your point. Although, what does the safe haven aspect have to do right now? I'm a bit curious what you mean by that. Futures require large amounts to hold overnight, 15K to hold one ES contract. Interesting. I've been looking at futures. One of my members in Discord was trading some futures, and he really liked it. So I was looking into it, but it just takes too much time. I don't have time to learn a new sort of field, really. Good job on the analysis. Pat yourself in the back. Everyone always appreciates some good knowledge. Keep it up. Braxton, thank you. I appreciate that. What brokers offer futures? I have no idea. What do you think about the 100 to mil flip? I'm going to keep my opinions to myself on that one, but by that answer, I'm sure you can understand. Do you take a look at GU? Yeah, we can look at GU. let's see. So yeah, as I was saying earlier, the problem with sort of New Zealand dollar, euro dollar, pound dollar is that they're very extended. So what we've had is a huge drop with essentially no pullback. There's been nothing here to allow sellers in, really. So if we look at where price is and we look how much it's moved, and the way that today's daily candle is looking, it's almost engulfing. It's not quite there, but it has potential to. For me, it's just a little bit of a danger zone. Now, having said that, let me actually just zoom in here. We also have this 200 moving average here, bounce, bounce, and is this the next bounce? Who knows? So yeah, I'm just a little bit cautious. And obviously these technicals are pretty lackluster if we are paying attention to the economics. Fundamentally, I am more bearish, but of course you still need to pay attention to the technicals. So yeah, at the moment, I'm sat on my hands. I've had a great run on pound dollar recently, so happy to just leave it to do what it does over the next, well, Friday and the weekend, and I'll come back on maybe Monday or Tuesday. Thoughts on NU? Yes, I was actually going short on NU earlier. Decided not to because obviously we're heading into news, but the setup actually now even looks better. So just following the trend here, obviously moving to the downside, strong US data, strong US dollar. We've had fib from high to low, 50% level tapped into and rejected. So I don't see any issue here at all going short. The problem is I just personally wasn't wanting to hold this through news along with the euro dollar position I had. But yeah, overall looks quite good to go further down. Do you use different EMAs on different time frames? Yes, I do. I use the 8, 21, 200, and the 50 all on different time frames. What's the most liquid FX pair? The most liquid is euro dollar. How can we differentiate scammers and the best mentors in the industry? Nathan, that's another great question, my friend. So you've got to look at what they're actually selling. So if they're selling you emotion, if they're selling you something that's like how I turned X amount into X amount, how you can quit your 9 to 5 in 30 days, or whatever it is, that's a red flag. Because the problem is with trading, again, it's not a one-way street. It's not a case of you start trading, have a mentor, and make 10,000 a month. You need to have capital, you need to have understanding, and all these things. So, long story short, if you want a good mentor, you should look firstly what's their track record, career-wise and in P&L. So you need to look and say, okay, well, they've been trading for 6 years. They've got X, they've made X amount. They worked at JP Morgan, or they're an ex-fund manager, or whatever it may be. I would also suggest if you have some money, don't go to social media. Go to LinkedIn and find someone, or if you have connections, try and ask a family friend. Generally speaking, you'll have better luck there. If you have a few thousand, I'd suggest getting a real mentor that has worked on trading floors. Do you think USD CHF will reach 0.87 soon? Let's see. Yes, I would imagine so. Yeah, I don't see anything stopping it, really. The problem is it's kind of a danger zone right here. So we've got this 200 moving average. We've got this level of resistance. So once we reach here, for me, it's like a no-go zone until we either see this break and retest, or we see the rejection to the downside. And at that time, obviously, then I'll come back and look at the economics and see what's driving the market. And maybe I'll start allocating somewhere there. The only reason for the dollar to do good is the only reason for the dollar to do good is only because of good data means that the Fed doesn't have to cut too much. Yes, basically so. So yeah, if we look at the data, I need to update this actually, but yeah, we've had During this period, a very weak labor market, we had inflation, obviously unemployment, a really shockingly low NFP, 50 basis points priced in, and then it was already priced in when it happened, so we had very little reaction. Since this point, we've seen only good data, really. So we've had an extremely good NFP, unemployment coming down, market no longer pricing in 50 basis points. And as this data is trickling in and people are getting more optimistic about the dollar, that's when we're seeing prices start to head to the upside. But you say that like it's a bad thing. It doesn't matter why, or like, you know, if it's the only reason. If that's the only reason, then fine, we'll capitalize on it. I think gold's just had a little bit of a dump. Oh, it's not really. Oh, no, it's not. Never mind, I'm lying. But yeah, gold's moving to the downside. Let's see. Maybe if we can come back down to this level, which is a bit optimistic, but if we can, I'll definitely look to buy again and actually hold the position this time. So that would be great if we can buy gold a little bit of a discount. Let's see. Give me a sec here. So gold is still neutral, which is a little bit of a pain. And after today's data, it's not a surprise as well. Obviously, that will be updated on the Edge Finder. I'm not sure if it has already. EuroCAD. Let's have a look at EuroCAD, actually. Someone was talking about this to me earlier today, saying that we could look at going short. So we've had, let's see here. So retail's long, COT short, seasonality is bearish. The only positive thing here is services PMI and unemployment rate. So that tells me that EuroCAD is actually a great position to possibly go short. Do you stream every day, or maybe you do analysis for the week? Nathan, I come on these streams, TraderNick or the A1 trading streams 2 or 3 times a week normally, and then I make my own like weekly outlook videos on my YouTube every Sunday. So yeah, EuroCAD I think has a lot of potential to go to the downside. Thing is, what can we really do here? Because it's a little bit difficult, really. So if we look on this weekly time frame, we've got a really strong support level through here that I don't really want to sell into. We also have this daily 200 moving average right here. So the only situation really that I can see at the moment is waiting for a break below the 200 and the level, and then some sort of retest here and a continuation down. I don't really want to sell in this area up here at the moment. I think that may change as I do a bit more research, but just from face value, yeah, not ideal to sell right now, but it's definitely getting there. I've just noticed we've also got this sort of triangle going on here. What do you think of US 30? US 30 is bullish. I'll go into that in a minute. Been on a 6-week winning streak. Was thinking about getting Bloomberg terminal subscription for clarity on fundamentals to help my psychology so I could hold a bit longer. Absolutely not. Bloomberg is a complete waste of money for retail. It's great for institutions because it has a lot of features they need, but retail we just don't need it. For example, you're paying, I think it's $25,000 a year. Yeah, you get news flow and you get Bloomberg TV, but you can get Bloomberg TV anyway. You also have like a marketplace on Bloomberg where you can like buy and sell Rolexes and stuff. I don't think, if you really want to pay $25,000 a year for that type of stuff, honestly, it's just not necessary. It's complete overkill. Also, the other thing is, unless you come from an institutional background, you won't be able to get Bloomberg. They're very, very picky on who they give the terminal to. I already looked into it with some people on my side, but it's, yeah, they won't just sell it, put it that way. So unless you can sort of prove to them who you are and how good you are, then yeah, out of luck. And what do I suggest? I would suggest the Edge Finder. Use code ELITE for a discount. I would also suggest getting Bloomberg, like the standard Bloomberg. So let me show you actually, just while we're on this topic. So when I'm doing analysis, I'll go down here. Oh, actually, this is a good plug. You can get Elite Traders. We send bank reports. So you can see what JP Morgan and Morgan Stanley, all those types of people are doing on a daily basis. But yeah, you could get Bloomberg. Actually, that's about it. Bloomberg, Edge Finder. Yeah, that's all I'd suggest really in terms of paid things. And Elite Traders Discord. But yeah, this is, I think I paid $300 a year for this. And it's just all headlines. I get live TV. But yeah, that's about it. How about GJ? Oh, and the last question, what do you think of someone from third world country to gain capital? You know what, that's interesting actually. I've got a bit of a story time about that, but I don't have enough time to go into it now. I've just hired someone from Nigeria to work for me to gain capital. So if you're interested, if anyone is from sort of a third world place, Nigeria, India, wherever you are, I have some jobs going. So if you are interested, send me a DM on Twitter or Instagram or something. I might have some things for you. So what were we doing? Oh, pound yen is what we were looking at. Sorry guys, I went on a little bit of a rant there, or a little bit of a tangent. So pound yen, similar to the other situations I've been speaking about, regardless of the primary currency, so pound, dollar, Australian dollar, I think they're all going to outperform the yen. I think they will continue to. So I'd be looking to buy and hold a full correction here of the start of the unwind carry trade. So essentially, I'd really be looking to buy and hold. But of course, you know, Bank of Japan is very unpredictable. They can pull things out of the hat, it seems. So just be careful. Yen will be the weakest currency. Yes, it will. Well, not out of every currency, but it will be weakest in sort of the G10 or like the main trading currencies, I guess. So I've got just under 10 minutes left, guys. If there's any questions, let me know. If not, then I'll just continue to go over some stuff. Bitcoin, New Zealand dollar, US 30. So yeah, we are seeing a bit of a pullback here on US 30 actually into this nice level. Let's see. I was tempted to take this trade this morning, but the problem is there's just no volume. There's nothing going on. So I'd really need to see a strong bullish candle to reject this and show the momentum is to the upside. Stop loss below here. Oops. And then I take profit at this fib extension, somewhere like that. And again, if we just go back on the Edge Finder, hold on, is it disappeared? I think the Dow might have disappeared. It was on there, I think, unless I was hallucinating. Oh, it has. The Dow's disappeared. Okay, well, scratch that then. Maybe I'll scrap this trade. Maybe for this month, the yen will be weak. I think the yen's going to be weak for a bit more of a prolonged time. Can you go over UJ once more? Yeah. So all of the yen currency is very, very similar. Essentially looking for this full correction. But yeah, it's just being cautious so you don't get trapped in noise or any sort of potential interventions. I doubt we'll have an intervention anytime soon, but the risk is there. You know, no one can really plan that perfectly. So I'd be looking really to just get in on this trend, wait for some sort of pullback. It might be a retest of this level. Get in, stop loss below these lows here, and then yeah, again a correction possibly up to here. So yeah, about 1,000 pips, maybe a 1 to 4. I'd probably risk 1.5% on this though, just to make the holding time worth it. Lots of good news for the dollar. No one is buying it. I think no one's buying it because it's expensive. It's had a huge rally. I think it just needs to have a little bit of a relief before we continue up. I'm still very strong on my bullish dollar aspect until we see otherwise. But yeah, so far everything's very supportive in my book. How do you analyze the markets? Is it 50% fundamental, 50% technical? It varies. To be honest, it depends what type of trade I'm looking for. It can be, 80% technical, 20% fundamental for day trades. Swing trades, it could be more towards 80% fundamental, 20% technical. But yeah, nothing too complex. Yeah, strange. Euro dollar is just continuing its run to the upside. Pound dollar. What's New Zealand dollar doing? Still moves down. Let's get rid of that. But yeah, I think the dollar, it just needs a pullback. That's just the way I see it. There's nothing, I'm not talking about any complex, hidden, crazy stuff going on that's going to drive the dollar down. Really, it's a natural market thing. Look for a pullback, buy the low, and continue this ride to the upside. You can DM me on Instagram, just type in my name, or on Twitter, it's the same thing, just Forex James. When you see a pullback happening to an area of interest, do you wait for a bullish or a bearish engulfing? Yes, generally speaking, yes, I do. Yeah, Germany's actually been the sort of lagger in the Eurozone recently. So if Germany's picking up a little bit, it will help the Euro significantly. However, generally speaking, if you put the Euro in comparison to the US dollar, it's still, still not really appealing. But yeah, it's just a case. Wait for this to happen. I do really expect this to happen. If it doesn't, I'll be a little bit disappointed because I've been waiting for so long to get into this position. So yeah, we'll see. Sorry, guys, just reading a message. Stocked up services. I've got no idea what stocked up is. Lots of good news for the dollar. Yeah, no one's buying. Okay, cool. So yeah, I think that's about it really in terms of what we can go over. Yen is doing very well. Dollar is doing very well overall, although it's having a down day. It's been sprinting to the upside. It needs a rest. It's normal. Australian dollar, kind of mixed. I'm not too happy with it. Swiss pound seems to be doing quite well today as well. Actually, pound Swiss is up. Pound CAD is up. Pound Australian is up. Pound dollar. Let's see what the pound's doing. The pound may be done actually to the downside now. So what we've seen with the pound is a lot of pricing in of rate cuts. So the Bank of England was relatively hawkish, which caused this almost perfect uptrend. And then very quickly it switched, which is where you see this really sudden move down. And essentially what we've seen now is just, well, what I assume is just this, just investors pricing in the rate cuts. So eventually that will stop, like we saw on the US dollar, where we saw the pricing of the rate cuts, and then eventually it slowed down. The rate cut came and nothing happened. So something to keep in mind. Don't go blindly selling the pound just yet. Cool. Okay, so I've got, about a minute left. So I closed my dollar NOK position here. I was in this, but to be honest, the recent data for the US wasn't really supportive of this trade. So I may get back in when we reach sort of these highs around here. I might try and sell again, but for now, I'm happy to just wait. So I'm out of this position. I think I took about 0.5% loss, so nothing drastic. Your bias in euro dollar, still to the short side, but yeah, again, I think short term we're going to see some sort of pullback just by looking at today's candle. So we've had we're having a really strong bullish candle. So it might be an engulfing candle, which possibly will lead into a retest of this previous structure, then allowing some sellers into this market. But yeah, right now, it's not something I want to touch because I am looking for shorts. I don't want to start looking to buy this right now. GU is the same thing. I think we're going to see some pullbacks now on the dollar pairs. All week, it's been perfect trading, really. So you can see it's just been a smooth run to the downside. And now we might see some relief, see this pullback to the upside a little bit to, again, let some sellers in. And then we'll see how it goes from there. So I'm done for the week now. I'm not trading anymore, really. I'm not looking to place anything new until next week. So guys, that leads me to the end. Chris is coming up, so don't leave. Have a great day. I'm not on tomorrow, so I'll see you next week. Thank you all for joining. Have a good day.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
What's happening, everybody? Happy Thursday. Welcome back. Updates for the Pulver alerts this morning. Closed out a winner on IBM. We had a nice gap down from our trade, the 230 put by 227.50 put, paid $1.15, closed it out today for 245, 246. So that's collecting about 95% of the max profit or so. So I'll take that versus waiting to see what happens tomorrow, especially if I possibly am traveling late tomorrow morning or late, well, I guess whatever. Could be traveling tomorrow before closing bell. And if for whatever reason, this price wanted to come back up and possibly gap fill, I don't want that to be threatened. So I'm taking the profit on IBM that's been updated in the Pulver alert section for the Discord. Got filled for 246, or I'm sorry, IBM got filled for 2.46 for profit, and then UPS was the other one. This was a 50-50. Look at that freaking gap, though. Oh, baby. This is another reason I wanted to protect profit. Now, it's still plenty above where we needed it to be, right? We were up around 131. We took the 131 by 132. It's still trading at 137, but that is the stuff that happens, in and around earnings where, we're way the heck up here at 144, well beyond the expected move, and this thing is ripping back. So, yes, I closed out here for profit. Max profit would have been $1. I closed it out for 95 and 96 cents. Okay. So taking 90+% of the profit, 95% of the profit, I'm out. UPS is down to the profit. IBM's down to the profit. Tesla is up to 248. Big old rip on the market today, gapping higher in the S&P. This credit spread is looking great. I'm actually kind of bummed that we didn't get a push lower, but this is obviously much better for the bulls. Tesla gifted the bulls a major. Yeah, I agree. I think if Tesla was a miss today, the markets would have been probably selling off a little bit more. But Tesla kind of saved the market a little bit today. We're not quite at all-time highs, not even close, but we got a couple gap fills to play around with today. So my thoughts on Tesla, how many of you are in the Tesla credit spread with me? Okay, so right now the trade is profitable. This is up to you. There's a couple ways to tackle this trade, so I'll show you. Here's what I'm considering. I know that the premiums are so good on Tesla that I wouldn't mind keeping the shares. So if something happens where we smash all the way back down to 225 or 220 and I get assigned, I will repair the trade and just take covered calls and try to get $5 or $10 a premium for a 1 or 2 week covered call. And I'll make more money doing that than just keeping the full credit spread, right? But if you don't want to hold the shares, if you don't have the buying power, of course, to hold the shares, then the easy thing to do, let me go into Tesla. Okay, so Tesla here, if we have the 225 by 220 and I close this trade out, right now it's trading for less than $1. So if you want to take $1 out of the trade, our max profit's 269. So $1 out of a max profit of 269, you can grab around 37% of the profit right now. Is that right? I feel like you're yeah. Is that about right? No, because that'd be $1. It'd be $1.69 of a max 2. Yeah, this is, let me do the math. I'm silly here. So $1.69 would be your profit divided by the 269 would be your max profit. So you're grabbing 63% of the profit now. So if you want it, you can take 62.8% of the profit today, close it out for $1 debit, and you walk away with $1.69 net profit per contract. That way you don't have to worry about any type of crazy volatility. That way price is up here at 248. Is it going to, get back to these highs again and then fall? Maybe. Is it going to, pull back immediately and fill the gap? Maybe. I don't know. So it's your choice. I'll do this. I'm going to keep. Here's what I'm going to do. I'm going to keep the trade as is with the credit spread because number one, if it stays here for the next 2 weeks, 3 weeks, then it's full profit, and I'm okay with that. Also, if price goes back down to the same like credit spread area or goes lower for whatever reason, I'm willing to own the shares and then repair this for more profit. It's a lot more work and it's going to tie up some buying power, but I'm more willing to own the shares. Okay, so let me do a quick update here on Tesla. I know I put it in it's probably up the chain a little bit in my thread. TSM, UPS, Google, Netflix, TSM, Snapchat, Netflix, Tesla. There it is. All right, let me reply to this one. So reply, Tesla update. Post Tesla earnings. Price is at 248.90. Well above the 225 by 220 levels. Current debit is $1. If you want to protect profit, you can close for $1 debit and keep the $1.69 net profit per contract. I am going to hang on to the shares, or hang on to the spread towards full expiration because I'm still willing to own and repair for more net profit. All right, so that's my update coming at you in 10 seconds. There. So your call. If you want to take the profit, you're taking 63% of the profit off the table, not worried about it. The expiration out, 2-3 weeks, nothing to worry about. You just take the profit today. If we have a gap fill, my trade's going to be probably showing a small loss, but I'm willing to hang on to it. If I get assigned, I get assigned. Every account that I have could take some Tesla and be totally fine. So I don't mind doing that. All right, but the profit's not a bad play. Anything else? Let's go to the SPX. So we have a couple of gaps to contend with today. Prices pretty quiet after a gap higher. Still really quiet movement in the morning. Grabbed a quick trade out of the SPX this morning. That was a nice little win. We have yesterday's gap up here, and we have the overnight gap right here, which is still not filled. I don't know what price is going to do, but obviously it can play around between both of these gaps. I actually, if I was to kind of guess what price can do, I'd almost like to see this gap from yesterday because Tesla's earnings are solid. Is that enough to lift the markets? Maybe. We do have some more earnings today. So if we come back in and we try to fill the gap from last night's close or yesterday's close, can we go back in, tap this gap, and then head back up into that gap today? If the market continues to go higher with this recovery and this bounce up, maybe we actually play around with both levels today. But until then, we'll see what happens. I mean, this was a nice little grab this morning on SPX, and gaps are available. I just don't know what we're going to get. The SPY level yesterday, did anybody take that trade with me yesterday? We talked about it live in session. We got in for a 575 long put. That was a beautiful trade all the way down to 575 on the SPY, and it was trading up to $2.75 credit with a debit that cost about 75 cents. You don't get that very often, but man, that was a fantastic trade. So I closed mine out at $1.41 and then watched it, trailing towards like 225 and 250. Saw this trading around 275 to 280 near the lows. But pretty good trade yesterday. Nice directional play. Thoughts on eBay? I'll take a look at eBay. I also did a couple of rolls. Does anybody, I don't think we're in this trade together, but I did take this trade live in session. I think it was when Frank was on with me. I took a trade on OXY. So I might have this listed in here. I just talked about I'm buying the shares. Let me see if I can find it. UPS, Walgreens is done for profit. Netflix is good. TSM we're good. Snap, Netflix, diversified ETF play did that there. Tesla, JD repairing that one. DPZ, that's profit. Nvidia, that trade is out to. Oh yeah, that was a hedge that I closed out for a loss. Okay, Coinbase out there, JD out there, WBA income play that's done. RL pending, BA pending. Let's see, where the heck did I put my OXY? Maybe I just put it on the chart. Well, I can talk through the trade right now. It's still valid. I'll tell you what I'm doing here. It's just an income play. The premiums aren't as high as I'd like them to be. So maybe allow me to take the risk and you don't have to, but let me at least walk you through it. And I'll take a look at eBay. So here's what I'm doing on OXY. I bought shares around 50. Let me see the trade price here. So OXY has earnings on the 12th. And if I go into my positions, I have 500 shares. I have a $53 call because I rolled the one today. So I had a $54 call that was trading down for like 3 cents debit. Rather than waiting all the day today, all day tomorrow to collect 3 cents, I just rolled it out and I got 74 cents credit, which netted like 72 cents credit on a new covered call. So I went out 2 weeks, lowered my strike price by $1. So now my break even is $51.99. Okay, so my break even is $51.99. The current price of the stock is $51.44. If it gets called away at $53, I make $1.01 on 500 shares. I'll make $5.05 hopefully by the 15th, or I'm sorry, by the 8th. And then on the put side, I do have, a $40 put just in case price falls lower. I want to have something to protect the downside if we have a big smash to the downside. So I just went ahead and rolled all of my October 25 calls, which was clearly not going to get taken away. I mean, price is likely not going up to $54 this week on OXY. So are we going up to 54? Unlikely. Therefore, I've lowered it down and my break even is now 51.99. Trying to get it called away at 53. I can make $1.01 per share. So let's see. I've got the 11/8 expiration, $53 covered call. I've got a $51.99 break even. I'm just going to add that in. Okay, so like I said, I think this is probably better that I take the risk. If we're interested in buying this as a group, or if I want to put this in as a trade alert officially, I would rather see it come down to like $40 and change, and then we start doing some bull call spreads or some credit spreads down here. That's a much better position to be long, in my opinion. Okay. All right, we good? Everybody can see my chart here, right? OXY, I'm watching it on my end. Okay, let's go to eBay. eBay, I don't know. I mean, eBay looks a lot like Carvana. It's had a great recovery. In my opinion, if you're following eBay, that double bottom would have been the best spot to buy it. We had a nice little support level, breaking out here. This has been running hot with momentum. So what would I do on eBay now? Probably nothing. I would be looking for, maybe this 100 or this is a 50 to 100 pullback, and maybe look at buying some dips, something like that. Let me take a look at the fundamentals on eBay and make sure it's not overvalued. The nice thing is we are pushing pretty high. We've got some all-time highs up here, $81. Get you some dips and pullbacks, not too shabby. Bought last November about $40. That's a great price. Yep. Yeah, let me take a look at fundamentals. So simply, let's go eBay. Trading below estimated value, earnings forecast to grow. Earnings forecast to decline for the next 3 years. That's not great. High level of debt. Okay. JD.com competitor. I mean, it's wow. Price to sales price or earnings actually is pretty cheap. Current price versus fair value. I mean, it's got some good upside potential. I don't mind it. What would I do with eBay? Honestly, when do we have earnings? Next week. Coming into earnings, I'll say this. We've already been on a pretty big rip from this low to high. I mean, eBay is was up 80%, has pulled back a little bit. I would love to see, similar to what we saw GE Aerospace do or McDonald's. I mean, if we have like anything that pushes it lower, I'd start looking at position for it. So this isn't a bad spot to be in, right? A little, pull back on some moving averages. The trend is strong. So, dynamic support. I'm looking for that to be a trend follower. That would be my plan. We've got earnings coming next week, so something to be mindful of. If you want, remind me next week on eBay, because we might look at an earnings play, and I might put something where maybe we get filled at a price I want to get filled at. So anything like sub 60. If we get sub 60, maybe doing a bull call spread or even a credit spread, and then be willing to take some shares and repair. Okay, but otherwise, this is looking pretty decent. I would just want to buy it cheaper. That's all. Especially on ownership. I mean, if I'm going to do even a bull put spread now, if I did like a 65 or 64 by 63 and it goes lower, I'd want to take the shares lower and then try to repair them. Now, I don't know what the premiums are like, but let's find out. eBay right now is trading at a 37.4 IV rank. We do have weekly options. That's good. We have earnings on the 12th. If I went out to the 15th, okay, that's weird. We have like $1 strikes, and then we have 50-cent strikes, and then that's a weird way to space out your strikes. If I do a bull put spread, so 51 by 50, I get 40 cents on the dollar. Go up a strike, I get 50 cents on the dollar. That's pretty much that's not at the money. That's like perfectly priced. So 50 cents, where would I want to own it? Oh, I'm on the wrong stock. Never mind. eBay. Come on, charts. All right, let's go out to the 15th. So earnings next week. If I went out to the 15th to the monthly, 64 by 63, 47 cents on the dollar for an at the money. That's not bad. 65 by 64, 53 cents on the dollar. That's a little bit better, but now you need price to go higher. Any dips? I mean, I said anything sub 60. So if we do drop, I wouldn't mind repairing, but let me see what this does. If I go out, let's say I own the shares. If I own the shares and I take the long put and I close it, keep the ownership, and I go out like 2 weeks. 2 weeks for an at the money, I can lower the cost basis by about $2 to $2.50. I mean, it could be an easy income play. It's just not like big, awesome premium. So I could probably take, if I did one contract, take 100 shares. I mean, I could probably make $200 or $300 on the trade pretty safely. If it goes up, cool. If it goes down, take the ownership and flip it. I'd want to be trying to own this thing in the 50s and then see if there's like a gap to fill, use the long put. So let me see. Do I like the right now? I mean, no, but if I put in a credit spread and it goes against me, I can take ownership. So even if it's an earnings push against me, I can take ownership. If it's an earnings pop to the upside, then, I'm in, and that's just a full credit. So choice is, do I want to do that? I don't mind. We've had solid earnings, right? I mean, earnings have been looking pretty solid. I mean, beating on top and bottom, but the stock obviously has still dropped, bottomed out, and then it's rallying. Is there a dividend here? 1.7% dividend. Beta, it's non-correlated. People buying at the auction house. All right, let me put a pin into eBay. I don't mind this trade because I think I could repair it, but do I want to tie up $3,000 to $6,000 for a couple $100? I don't know. Not really. So I want to come back to this one next week around earnings. How's that? I think that's fair. All right. Oil, sure. Oil trading at 70.60. I still don't like calling the floor. I think this is it's very possible that we still bounce. Okay. Do we bounce here? Maybe. The only downside with oil, and this is where I think there's a lot of forces behind oil right now. And this, to the downside, if we break this floor, this is lower inflation. Okay. If we see oil break this floor, that's lower inflation. That's probably what the U.S. wants to see. And we've seen the news earlier, like, global demand is down. Saudi Arabia is wanting to increase production, drive market share up for them, drive prices lower per barrel. And I've said this, like the U.S. and Saudi Arabia are two countries in the world that can pretty much exist in like a maybe sub $40 per barrel and still making profit. It's kind of crazy. So does it mean it's good for other countries? No. Is it good for OPEC? No, but doesn't matter. If this is what's going to happen, then inflation to be tamed, especially when it comes to all inflation, not just core, which is excluding food and energy, lower oil prices or flat $70 oil prices. I don't know. Is it just me, or is like oil a little iffy? I could see oil breaking this floor and dropping, $10 quickly. Or we could see a squeeze to the upside, and this is higher inflation. So something tells me that there are more pressures and more forces trying to push oil lower to keep inflation under control. Just my thoughts. So I'm not calling this floor. I'm also not short. If I'm going to get short oil, it's going to be way the heck up here. If I want to short oil, I'm taking defined risk trades around $90. This is going lower highs, lower lows, or lower highs and equal lows. And that's why I also think that this gets coiled and it looks like it can go either way. But if we build from this top to this bottom, either it's a range trade or it is a floor that's about to break. And that's my concern, because over here, there's not a lot to stop it. If this floor breaks around $65, there's not much stopping this thing until like $55 or even $45. And if you measure this move, you're looking at about a move of, $20 or so, right? From 65 to 85, 65 to 90, that's a $25 to $30 breakout. So if we break the floor at 65, you're looking at, $45 to $40. So I don't want to mess with it. I think this is good for inflation to go lower. Even with a Middle East conflict going on right now, oil prices aren't jumping a lot. So I'm saying I'm watching. Crude oil, same thing. Or I'm sorry, not crude oil is my futures trade. I'm just hanging in there. I took some profit already earlier. I don't want to have any exposure on oil right now. Natty gas is up a little bit. I'd like to see this come back and retest some lows if possible. This is probably a trade I'm looking at for Q1 next year. If we're down in this area, I'm looking at a Q1 entry to a summertime, probably May. I'll go out to like May or August next summer and see if I can get oil or to natural gas to go higher. But I want to see if it comes back into these really attractive levels and then take some contracts out to May, June, July, August. Gold is off of a one-day sell-off. Still hasn't pulled back to levels that I want to see on the daily. So I'm still waiting. There's the 21, there's the 50. Does this have to require the dollar to capitulate? Possibly. Let's go to the dollar for a second. Okay. A little bit of hesitation today on the dollar, but if this still, after, so many green candles, we've had literally 1, 2, 3 red candles out of a streak of what? That's a lot of green from this bottom. So in 18 bars, you've had 3 basically pause candles and you've had 15 bullish candles to surge this thing higher. So anyway, I'm still looking for the dollar to see if and when it's going to turn. You know, it could start turning on smaller time frames. This would be a better spot technically with this resistance up here. So I like that, you know, kind of 105, 105.50 area, but look for confirmation on a 1 hour chart. If it starts to turn faster, let's say that it turns faster. We break this structure. I look for some type of pullback or some type of equal high, and then see if the dollar is actually going to start going lower. You know, it might chop around for a little bit. We might have a range up here, but still watching the dollar. Okay, back to gold. If the dollar still goes higher, I can see gold falling just a tiny bit lower. I'd still like to see it pull back into the 21 or 50. If those levels are hit, I'm probably adding some exposure on GC and GLD. Actually, speaking of that, I want to put those in here as proxies. So let me add that, and let me add that. So GLD, drag this up on my watch list. There we go. Okay, so now I've got gold, gold futures, and GLD. Silver also pulling back. Silver futures pulling back, and SLV, which I own shares of, also pulling back. But look at the charts. We've got a pretty good trend here. Dynamic support around all these moving averages. So I'd like to continue to see that trend stay in play with silver. Same thing on silver futures. I did put in this trade 32.50 by 32.75. That's a bull call spread for a 10-cent debit. The risk is $500. The profit's $750. I'm going out to end of January. So I'm looking to see if this gets filled, which is going to be a kind of an efficiency trade. If that gets filled, and by the end of the year, silver's higher, great. Then there's a $750 profit. So adding some exposure, hasn't been filled yet to my knowledge. Let me double check. Let's go /SI. Pending at 0.13. What? Oh, you know what? I need to put that trade back in. That, I think I accidentally did this good for day. Let me try this trade one more time. So 32.50. Oh yeah, it was a bull call spread. That's right. Let me try this again. So SI out to January, 32.50. So I'd buy that, sell that. 13.9. I'm going to try to take this down to 10 cents. And that should switch the mechanics up where I get, it's a $500 debit, but my max profit is $750. So if price falls a little bit, trying to get filled at 10 cents here. So that would be a $500 risk, $750 reward. Only takes about $300 in buying power. I'm going to put this trade in good till canceled. Now I can take the trade. All right. So I will put this one in and add this to my futures tab or channel in my Pulver alerts. Okay, so make sure this is buying the call, selling the call. Yes, yes, yes. Risk looks good. Pending. There it is. Okay, now we can put this order out there. I get filled on these. That's 1, 2, 3. 1, 2, 3, 4, 5. All right, what's up with this broker? 1, 2, 3, 4. Am I duplicating this trade? 10.18. Yeah, so I already put this trade on. What the heck? So that's working. Hang on a second. I feel like I do have this trade on. All right, I don't want to duplicate this. So it's already in 1, 2, 3, 4, 5, 6, 7. So I can cancel that one. Cancel that one. Cancel that one. Now we have 1, 2, 3, 4, 5, 6, 7. All right. So the trade's already in. What the heck? That was weird. And then futures, let me make sure I have this in. MES, SI. Got it. It's already in the section. I thought it was good. I just didn't put good till canceled. Anyway, we're good. Silly me. That's the trade. Still looking at it. All right, what else we have? Let's go Bitcoin. Bitcoin still testing this resistance area. Most likely Bitcoin is going to be a post-election deal. Post-election is Bitcoin making all-time highs. This would be the pleasant little Q4 surprise, in my opinion, right? If we've got a breakout here going to all-time highs and higher, that would be nice to see. Any exposure in Bitcoin at these levels, any exposure accumulation of Bitcoin through the last, 4 to 5 months, if that's your Q4 surprise, that'd be an awesome way to end the year. Get through the election. I mean, it seems like right now Trump is probably getting the slight edge for the polls from what I can see. I mean, I know he came out a little bit more pandering to the Bitcoin or the crypto audience, and then Harris did the same thing, but whatever. People believe what they want. So I just think we're hitting this resistance level, and it looks good, but it's not going anywhere, and we just might hang out here for what, another couple weeks? Does anybody think we're going to get crazy breakouts prior to the election? Show of hands. I don't. Okay. I don't think this market's going really anywhere before the election. And I know we have earnings next week on Mag 7. There's a lot of market cap to get thrown around, but it wouldn't surprise me if things are relatively tight and contained, or what does break out immediately pulls back. So don't be surprised if we have some earnings plays where prices here, earnings is great and it gaps up and then it fills and it gets right back to neutral, right in the election. Or if it gaps lower and then we get some gap fills through the election, I'd rather play that. I'd rather see if we have some chances to buy some flip and dips, man. And get some of my, my moving averages, the 21, the 50, the 100, like just find some levels to see some dynamic support so I can look at a potential Q4 rally as opposed to just buying highs and buying highs and buying highs. So like I said, if Bitcoin keeps hammering this high, I would say right now that's kind of the intermediate structure. This low is my next level. But yeah, if we just hang out here and just keep peppering this high, if we get a breakout to all-time highs and a flag or something, this could be off and running, and everyone's going to be chomping at the bit for this 100K milestone. That could be a nice little addition to a Q4 rally to further cement, just a heck of a gain overall in a portfolio that's traded stocks this year, traded some commodities, traded some Bitcoin. Yeah, pretty good. So I just crunched the numbers. I'm up 24.05% for the year, and Bitcoin hasn't even been a part of that. So I'm hoping that Bitcoin will cooperate, and I'm looking at another maybe 5 to 8% with the portfolio gaining on Bitcoin, which should be a nice little way to, if I can take myself over 30% this year, that's pretty good. All right. I do see I keep getting some Twitter alerts on SoFi. SoFi's up to 11.16. I've got some decent profit rolling in. I've got a profit target set on SoFi right here. So have some shares, got some profits rolling in. I've got to take profit at 19 bucks. I don't have it covered right now. Do I want to cover it? Depends on the premiums. Let me see. Take a quick look at SoFi. We're trading 11.16. I don't want to do an in the money. If I do put on a covered call on SoFi, it's probably going to be an in the money. If I went out through, we have earnings on the 29th. It'd be nice to see earnings do something positive, push this thing higher. The big resistance is right here. I've already measured this move, this kind of equal low area swing to the upside at 11 and change. If this is going to be a measured move, I looked at this as an aggressive move. This could be a cup and handle. So if it breaks this neckline, that measured move gets me up to like $18, $19. Now, obviously, it's been up a lot over the last couple of months, and there's clearly some resistance there. So if we hit this level and we reject, well, then I'm just still sitting and holding some SoFi. But if we breach $12, let's say we have something that gets us up into this area, for the first time in years, we are getting back to the initial price. Okay, so if we're up above $12, then I think this has more room and more momentum to buy the dip and see that type of return. So I'm hopeful, but what I'll likely do to get it called away is I'll do something deep in the money. And that way I'll see if I can collect a little bit of premium. Okay. All right. What else? Crude we did. So where's it at? Oil's right here. So oil, I just don't want to guess the bottom is here. If this is the floor, I could see this floor breaking, and mostly due to the let's say the war on inflation. Okay, that sounds very political, but that's like the trigger word. The war on inflation. If we break the floor at $65 and oil heads lower, it can probably drop $10 to $20. And so I don't want to take a trade outside of defined risk that's going to be, calling that bottom. So what I'd rather see oil be doing is if we come in here and we keep testing, we haven't broken any highs yet. It keeps getting coiled and coiled and coiled and coiled. I don't know what oil is going to do. If it breaks the floor, there's a lot more room there. If it squeezes to the upside, I mean, that trade to me makes sense. Like this bullish push makes sense. The problem is this increases inflation, and I think so many forces right now are trying to drive it lower. That why not? Why not just overproduce? Why not supply, just tons and tons of oil to the markets? And Saudi Arabia is not backing off. U.S. isn't backing off. So I think that I don't know. The floor is probably vulnerable in my opinion. So I don't have any oil positions right now. I'm not exposed to it. I closed out my CL profits earlier, but that's what I'm watching. We did Bitcoin. Let's talk some other stocks here. Are you freaking kidding me, MicroStrategy? Jeez. So this isn't even earnings yet. MicroStrategy earnings is next week, and this thing's at all-time highs. Again. Well, it is what it is. I've got trades. I mean, I've got a bunch of ratio spreads and 1-1-1s and income plays, but I don't have any partial shares of MicroStrategy, but I'll be watching. Ethereum still hasn't bounced back. Not yet. Copper still waiting. Japanese yen, flip a coin. Have your dog pick what you want to do on Japanese yen. Let's see here. German DAX is down just a little bit. FTSE's still sideways. HSI, let me go to China stocks here. We'll go Mag 7 before I wrap up. HSI down about 1.3%. BABA is down 2.38%. Baidu down 1. Oh my God. Baidu, you freaking turd. How is this? Ugh. Up and down. This is not what I wanted to see. Son of a bee. Well, we'll see what happens. I mean, this piece of crap stock might be trying to come back and retest this low. At the same time, it's my covered calls are probably looking pretty good. But let me see. Let me see what my China stocks are looking for. So I rolled a couple things on Baidu. Let me see what I have here. So Baidu. So I have a cover at 115, 130, 125. Let me check and see where these are at. I mean, percent profit wise. I don't know. It's I'm not really able to cover and roll or get rid of it. It was like I took $1 on the covered call and I can close it now for 5 cents and issue another one. I just think I'm gonna have to kind of sit on my hands and wait. And this is what happened earlier. This is the same thing China did before. Up, breaking all the structure. Thought there's a nice little falling wedge, and then retest fresh lows. Up, slow lows. Up. This was a big, ridiculous surge, but we're not there yet. So who knows? And I look at this high. Maybe this is some type of deeper, head and shoulders or a reversal pattern, which is fine, but frustrating to not see that immediate follow through that the market was willing to give it. I mean, my gosh, you saw like these 40% rips, and it's like, yeah, we'll pull back like 70% of the way. So China stuff is still a big old question mark. Nobody knows. Is there more stimulus coming? Is the market going to be more excited about it? Maybe. I also think this is something where the election and positive flows and animal spirits and all this stuff is going to play into it for the bigger global economy picture over the next 3 to 6 months. So we'll see. I'm trying to be patient here, but yeah, we'll find out. And then JD, I'm just going to keep aggressively repairing. I'm out, I think, until the 8th on my positions for JD. Check here. So JD is, I've got some shares covered at 42. Right now, the trade price was 85, and it is trading for 36 cents. This is out to next Friday. I'm just going to let this decay over the weekend and then just continue to repair it. My break even should be in the low 40s, I think. Break even is, let me go down here. Overall break even on shares, that was before 26. Nope, that was before. Here we go. 40.82 is my break even. 40.82. We're trading at 38.93. So as long as it doesn't just fall off a cliff, I'll just keep repairing aggressively. Let me take a look at the covered calls for right now. If I go out a couple of weeks, a $41 is giving me $1. I mean, that's okay. If I lower it by $1, fine. If price stabilizes, going out 15 to 30 days, I'll probably get a couple bucks. So I'll let it do its thing, but I'll assess that one next week. All right. Any other stocks? NVIDIA, I see the question for NVIDIA. NVIDIA 139, similar to a lot of the other positions I'm looking for. I'm not trying to call the top. I'm not trying to buy into tops. I'm just waiting to see if it offers up something good. Through NVIDIA's earnings, we don't know until after the election, right? This is November 20th. So if we have some election volatility, is it possible that we come back into the 21 or the 50? Maybe. Okay. I mean, look at this. Look at the technicals here. If we have resistance, 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 and we pull back into this area, that's a pretty good spot to be looking to get long and see if we were going to break and go higher. So we'll find out. Ideally, I'd still like to see this 200 EMA get hit. It's already at 440 bars, which is a high bar count, not impossible, but it would be difficult for me to think we're going this high without having price get some type of reversion back to find it. So if we go higher, I'll measure the move, and most likely it's, I don't know. I think we're gonna find this 200 EMA first. But actually not first. That'd be silly to say that. But if we find some support in here and the broader market is going higher for the end of the year, I'm sure NVIDIA will do just fine. Unless there's some hard rotation out of Mag 7 into everything else, which I doubt. I mean, Mag 7 earnings are next week, so we'll see what it's made of. Right? All right. Any other charts? Any other questions for me? Any other currency pairs? I did some currency talk yesterday. Swiss pairs. Let me actually check the currency strength chart before going to currencies and see what's going on. Currency strength. So what a difference a day makes. Classic Japanese yen, the weakest of the weak and the strongest of the strong. Now, volatility is not crazy today. It's 45 and 30, so only about a 70-point swing on some of these. But you're watching the Aussie drop pretty hard today. You're watching the Japanese yen stay strong and get stronger. You're watching the pound fade a little bit, but still pretty strong in the day. Actually, you know what? I do like this euro pound trade. If anyone wants to, jump on the crazy train with me, this trade might be a little gutsy. We're about the same level we talked about yesterday. I'm going to take a trade here at market and then put in a pending order at 82.50. Okay, so I'm going to do this. I'm going to buy at 8.332 and then buy at 8.250 and then stop at 8.150. And my profit target's going to be, let's see if we can get back to like 85. Okay, so basically I'm looking left on the chart. We have all this structure around 82.85, down here to 8,200. So I'm going to take that trade on the euro pound, see if this is a strong level of support that goes back into 2020, back into 2016 with Brexit noise. If it breaks the floor, then sure, we've got some efficiencies to fill back at 8,000, but I'm going to get out of the trade before that. If it holds here like it has since 2016, again in 2020, again in 2022, and we're back down here in 2024, so just looking to see if that support can hold. If it does, hopefully it's a pretty straightforward trade. We bottom out in here and then rip back up towards past support, become resistance around 85. So let me issue the trade there. Price target around 85. and stop loss around 81.50. There. So it looks like it's a 1-to-1, but if you take 2 levels to the trade, you're going to increase that probability on the second one, or the reward to risk, right? If I buy to 82.50, we're looking at a 100 pip stop, but we're going after 250 pips. So the total trade would be this. If I'm right, I can win, let's go 8332 minus 8150. So we've got 182 risk plus 100, right? Yeah, so I'm risking 282. Okay, so 282 is my total risk. And then I have 250 plus 170. So I'm risking just over 200 pips to make 420 pips. It's fair. Not quite 2-to-1, but pretty close if we get filled on both. All right. So I'm going to throw that into my Forex trade. Anybody watching the dollar CAD still? Dollar CAD at 38.50. Keep an eye on this one. I have two reasons, right? One is resistance. Okay. But I'm telling you, 2 things, right? US is definitely in a stronger position economically than Canada. Other thing, if the floor breaks on oil, CAD's getting weaker. So I would not be surprised. Either this thing turns aggressive to give us a sell trade, or this thing is going to break out and it's not going to stop. And this is a 2-year range that's going to 145. I talked about this yesterday, but I wouldn't mind stacking up those orders where I just take a trade at 140 and then 140.50 and 141 and just let it go to 144, 145. And just once we get filled on these trades, then we're at a stop loss. So I'm just going to go ahead and do that. I'm going to test this 140 and see if we just have this thing breaking out and staying up there. So I know there's inefficiencies on this recent move, but it's more like if price can prove it, the highs up here aren't even at 4,000. So let's see what 4,000 gets us. So I'm going to do a buy trade here. So this is going to be a stop buy. I'll just put buy at 1.40. I'm going to put 4025 and then buy at 1.4075, buy at 1.4150 and buy at 41. I'll go 4,200. Profit at 1.4400 to 4,500 and stop, we'll say TBD, but I'm guessing around like 139 to 39.50. Okay. So I'm just going to start looking at small positions and stacking it up to see if we actually make this break to the upside. We're not there yet. Price has to prove it. But once it is, let me set a chart alarm at 1.4000 and see if we get there. And then our first trade will be filled at 40.25. Okay. Aussie CAD. I'll get those added into my the A1 trading Discord for my pulver alert section. That'll be in the Forex trades. It's been a minute since I found a good Forex trade. And I like dollar CAD for just set it out there. I like the euro pound right now. Aussie CAD, I'm still looking long, and I'm holding my Aussie CAD long to 94.50 or so. And New Zealand CAD, I'm still long as well. I need to add the D there. New Zealand CAD. I don't know. We just have like good channeling here, right? Good structure. Watch the channel. New Zealand CAD just seems to be doing this. Eventually, I'm looking to see if it hits this high. Right around 8,800. That's my profit target on New Zealand CAD. So Aussie CAD, New Zealand CAD, I'm long on both. Okay, Swiss pairs. Currency strength chart today. Swiss is weaker, but Aussie's dropping, CAD's dropping. Yen is getting stronger. Did that just happen here in the last like 10 minutes? Pretty much. Last 20 minutes, yen jumped up a little bit further. Yeah. I don't like the yen. I don't know how many times I have to say it, but I'll keep saying it. So, all right. And then dollar process, let's go DXY for a moment, and then I'll wrap things up. So dollar index, still watching, hasn't officially turned. We've had 15 bullish candles to 3 basically pause candles. There's still room for the dollar to keep melting higher until we have the election, possibly a post-election trade into the remainder of the year. If we can see resistance, great. Let's see it. Let's confirm it. I'll watch this on a 1-hour chart. I wouldn't really want to force any trades on the dollar index or even in dollar crosses until I have confirmation on my 1-hour chart. So this is still bullish and has been bullish. I mean, that was a pretty easy trade. But now that I'm looking to sell it, I'm just going to wait and wait and wait and watch the 200 EMA. And if it crosses, small trade, sell the top again, trade 1, trade 2, and then see if price will continue lower. Okay. All right. So I'll get the trades updated in the Forex section for my alerts. The Forex trades, I'm going to do Euro Pound and Dollar CAD. Let's see here. Yeah, so that's it. And then we took profit on UPS, took profit on EM. If you want to take the profit on TSLA, you can for Tesla. That's good. You're up like 63% of the full profit right now. I'm going to let it run a little bit farther just because either one, I get full credit by expiration, or two, I've got the buying power to take on the shares, and then I can hopefully flip it because the premiums are so good. And then we've got a lot of earnings next week. So I'm assessing those earnings. I may take a couple stabs. Just be ready to get creative. I might do some credit spreads. I might do some bull call spreads. I might do some four leg trades. Mag 7 is next week. So the market is definitely wondering, based on market cap alone. I mean, we'll have like $5 or $6 trillion worth of stock movement just based on market cap. So it's a big week. It can control the indexes. If Mag 7 delivers, maybe we're sitting at all-time highs right before the election. If Mag 7 or just the market in general like sells off pre-election, like maybe earnings don't matter. But the nice thing is let's say Mag 7 offers a discount. I'd still buy dips. I mean, if we had let's just say Amazon. Okay. If Amazon trading at 186, if Amazon during earnings next week gaps lower, I'm going to start looking at some scooping up, and I'll try to fill a gap later. So yeah, I mean, I like that a lot. I just don't know if we're going to get the trade. And if it's steady, then sure, we can just take some bull call spreads, go into the end of the year, make it easy. And that might be the trade, honestly. I mean, if we have any type of dips, I might just go, you know what, for the end of the year, can we just stay above this? Take an earnings play. Is it good enough to get higher by the end of the year and take that play? We'll see what it prices out. So I'll price those out next week for the Pulver alerts. How's the NASDAQ? Probably the same as SPY, which is starting to move out of this opening range breakout. Here are the Qs, still in the opening range breakout. So very tight trading today on the QQQ. Very tight trading on the SPY, but it's trying to break out. We're looking at that gap fill from yesterday's close. So just, I don't know, watch this. If we fill the gap here, look to see if that actually offers a bounce. That wouldn't surprise me if it offers a bounce today. And then we'll see price either just stay here for the day, and then Friday, either a gap fill or a retest of the lows. I'm not sure. But we finally did have a nice directional push where it was about an $11 move on the week. And all that happened because of yesterday. So anyway, for a big directional day yesterday, today is pretty lackluster, which is perfect for some of my trades in the morning. All right. That being said, enjoy the rest of your day. See you tomorrow. All right. Thanks, everybody. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.